So that's what the play is here. Invitation Homes has 82,000 rental single-family homes in some of the hottest real estate markets in the country. I'm sticking with it. I think it's going to work long-term.
All right, Jimmy, to you from Vonnie in New Jersey. What is your view on Caterpillar? It's down, but will it get a boost from the China deal? I have it. What should I do?
Okay, Vonnie, it reports in 2 weeks. I own it, and we need to see their guidance. That's what this comes down to. And guidance can't just meet expectations. As you point out on the back of the China trade deal, it needs to exceed expectations, which are so tepid right now. I can't see them doing anything else but exceeding.
All right, Weiss, to you from John in Austin, Texas. Will Micron continue to run?
I believe it will. I'll give you 3 reasons. Number one, these used to be pure commodity stocks. They're not so much anymore as they get more and more into basically every walk of life. Number two, you have 3 players in memory now. And they've said, if you read the press releases, the articles coming out of Asia, that they're holding capacity and they're raising price. And number 3, the stock's got some momentum, I think continues to move, and the company said it's going to be a hockey stick. So you'll see the recovery in the second half. So I have until then to be right or wrong.
You got a number 4 or 5, or you stop at 3?
I sort of had 5, and I put it into 3. So I know we're pressed for time.
Do that really well.
Yeah, thank you.
All right, we got more trades straight ahead. The one stock Steve Weiss is trimming, and where Josh says it is time to take some profits. We'll do that right after this break.
At Fidelity, online U.S. stocks and ETFs are...
Do you remember when it first started?
Here at Tesco, we're celebrating over 100 years of great value with even more great prices that take you back. Like a 6-pack of apples from 69p to just 49p. All this week at Tesco.
Selected larger stores subject to availability. Offer ends 20th of January.
Puts his head down, crashes into
the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action. You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open 3, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in. Touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
On the goal line, scores! It tucks it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
Gonna move, and a shot, and he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
We're back. We're going to talk about some of our trader moves now. You sold most of your Boeing.
I did.
Why?
A few reasons. It uses too much capital, number one. Southwest came out and said they're not going to be on until June. I just find too many other things to do in the market. And I'm not particularly sold on David Calhoun, the new CEO, because he was on the apology tour sitting right next to Muhlenberg when he came out and said, we'll get regulatory approval in December. He's been a board member for 10 years. So he's part of this whole thing. So I don't feel like good about it. Now, this thesis still holds. There are only 2 of these manufacturers.
Right.
And at some point, I'll get back in. But I'll wait to get back in until there's positive news flow starting. So I don't have to own it now.
Okay. Jim and Shannon, you own it. You swayed at all by Mr. Weiss's argument?
Go ahead, Shannon.
We still go back to kind of the expectations for cash flow over the next couple of years. And while it has been difficult, especially given, what's happened over the last several weeks to own the stock, you look at it in terms of a competitive advantage here. There's a duopoly. They're going to get back online. So we still think that there's going to be upside in the stock over the next 2 to 3 years.
Look, Steve's fatigued. I get it. I'm fatigued too, but I'm sticking with it at this price. At this price, I see asymmetric risk to the upside.
All right. What about Teladoc, Josh?
Yeah, I just wanted to mention this. If you came into this with me as a trade, we were talking about in the 60s. I brought it to the show a couple times a few months back. This is now almost a $100 stock. So it broke out. We were talking about the breakout from a trading perspective. It absolutely worked. RSI is now getting very, very high. So, if you're a shorter-term trader and you came in on this, I just wanted to do an update and tell you this is where I would start to take some off. I am personally not selling because I was talking about this for myself as an investment. But I do think that this is one of the stocks that's had an obscene run higher and will pull back if there's a broader market pullback. So if you're a trader, walk away. You did very well. You're up 50%.
All right, good stuff. 38% in 3 months. All right, we're going to take a quick break. We'll do final trades on the other side.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. 1 free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
Here at Tesco, we're celebrating over 100 years of great value with even more great prices that take you back. Like a 4-pack of Magnum Classic ice creams, now half price, from £3.20 to just £1.60, all this week at Tesco.
Selected larger stores subject to availability. Offer ends 27th of January.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
Except for May.
Yeah, what?
Sorry. Okay. Talking to Shannon.
Welcome
Market related.
No, that's okay. That's okay. I always like to throw it at you when that happens. Earnings next week. IBM, Netflix, Intel, Southwest Air, American, United, Netflix. It's going to be interesting. Don't you think?
Yeah, coming off of those Disney Plus numbers, Peacock launching, think about being able to monetize that data.
Yeah.
I hope they have a really good report.
These tech moves that we've seen. Intel, Jimmy, you continue to pitch this stock.
Yeah, I think it's the most attractive of the chip sectors because I see it very defensively. But I think the important thing is it's not just Intel, but Texas Instruments. So the SOX, the semiconductor index, is up 55% in a year. These guys better start telegraphing, not just Intel and Texas Instruments, but all of them.
Texas Instruments was probably, it was one of the most disappointing earnings reports last quarter. You remember that?
I don't, but the reason I don't is because a lot of these
just put that out of your mind. It was so ugly.
Maybe. Texan, Micron, Intel, a lot of these get lumped together and they move to the beat of the same drum, the same fundamental forces. They need to show us that the outlook going forward is good.
A lot of these stocks have done a lot. Texan in 3 months, nowhere. Intel's been okay.
It's been okay.
It's been okay.
Skyworks been phenomenal.
Corvo.
All right, let's do final trades. Shannon, you kick us off.
Abbott Labs, they report next week. We're looking for them to shift from achieving additional profitability and efficiencies to a more pro-growth strategy.
Josh Brown.
Staying long Invitation Homes, Judge.
Thank you.
I like it.
Farmer Jim.
Cisco is finally playing catch-up. It was in the penalty box for 2 misses. It's playing catch-up. I think it continues.
Where's Cisco up in the last
I'm going to give you 2.
months?
Qualcomm, I think it's going to continue to do well. I've been buying it. But UAL reports Tuesday. That should be a great quarter.
All right. Yeah, Cisco's done nothing either.
It's starting to come back. Watch it. We'll talk.
Okay. Good stuff. Great weekend, everybody. The exchange starts right now.
Thank you, Scott. Good weekend to you as well. And happy More New Records Friday. Welcome to the exchange. I'm Brian Sullivan. Here's what's ahead. Call them the $1 trillion horsemen. Alphabet joining the 4 Comma Club as investors continue to bet on tech giants. But is this kind of top-heavy market healthy for the markets? Plus, workers needed, a lot of them. One area of the jobs market that is spending big to train employees in a tight labor market. So where can we find more than 4 million workers? And Facebook, Fitbit, and a fight, kind of, between NFL owners. All that's ahead, but we begin with today's markets. And once again, Seema Modi at the New York. Your middle name is now going to be Record because it's just going to be Seema Record Modi because every time you're on, we're hitting new records, Seema.
I'll take it, Brian, from you any day. Stocks continuing their steady ascent to historic highs, as you were just pointing out. We typically see a slightly more defensive tone as we head into a long weekend, so watch out for that. The Dow currently up 29 points, and we should point out that we did see new highs in Japan and Europe this morning. Despite the drag from high-profile names like Uber and Lyft last year, the Renaissance IPO ETF actually hitting an all-time high just in the last hour. Want to point your attention to Phoenix Tree Holdings. That is one of China's largest co-living platforms. It went public here at the NYSE, pricing a downsized IPO at $13.50 a share. That was well below the expected range. The stock is down 3%. Fundraising by Chinese companies on Wall Street plunged last year. In fact, the average Chinese issuer is down 18% since going public. The question now is whether the pause in U.S.-China trade tensions will improve the IPO backdrop for some of these Chinese-listed names. Brian, back to you.
All right, good stuff there, Seema. Thank you very much. All right, so let's begin this program with the 4 Comma Club, the $1 trillion horseman. Whatever you want to call it, Alphabet finally crossing that high water mark, notching a market cap of $1 trillion. Let's put this into a wee bit of context, shall we? The only time the top 5 market caps are concentrated in one sector like this, all 5 biggest companies were in the same group, was back in 1980, and they were in the oil industry. Of course, that year marked the end of what had been a pretty good run. Here to take a closer look at whether this should give you some pause is Bill Smead, CEO and CIO of Smead Capital Management, and James Chalkmock, partner at Clockwise Capital. Good to see you as well. Bill, I want to start with you. Are you comparing this to all the way back in 1980 when it was Exxon and Mobil and Texaco that were leading the charts?
Brian, it's worse than you described. 12 of the 20 largest market caps at the end of 1980 in the Fortune 500 were oil companies.
12.
At the height of the dot-com bubble at the end of 99 and early 2000, only 3 of the 5 top market cap companies were tech-related. I think Exxon and GE were still in the top 5 market caps, and Microsoft and Cisco and Intel and others took turns being the largest market cap company at that time.
Why is that bad, Bill? Why is that wrong?
Because there's only a few things that are guaranteed in the investment business, Brian. And the number one thing that's guaranteed is things will change. In all of our economics classes, we learned that if something is extremely profitable from a micro or macro standpoint, people will keep coming in and providing new competition to that, and marginal profit gets driven to zero. In the stock market, the thing that's been the most profitable has been buying revenue growth stories in an era where revenue growth is hard to come by. So our argument is this is the antithesis of 1981. It's exactly the opposite of 1981 because 4.3% of the index is in energy, and back then it was 29%. Yeah. So think about what that means for technology if you want to make above average returns over the next 10 years.
Yeah, James, what do you think? Are you worried about it?
I mean, look, there's nothing magical about the trillion-dollar valuations. It's just the fact that the addressable markets are larger than they've ever been. Now, looking back historically, only 15% of the time has the market traded north of 20 times. We're actually in one of those periods. Now, if you look at the FANGs more specifically, they are actually not in nosebleed territory, but we are making a call for 2020 that they are at or approaching peak valuations. Now, the question is, how sustainable are these trillion-plus dollar valuations? And I think what will happen is these companies will bifurcate into two. On the one side, you'll have the companies that can continue to drive growth levers out of the existing infrastructure built over the last decade, and the other half, which will have to rely on third parties to drive that growth. I think Google, now a new entrant into the group, is in the former camp, while Apple and Amazon are continuing to be advantaged.
I guess, James, the question, and nobody probably can actually answer it because we don't know, but take your best guess. If and when investors grow tired of those 5 or 6 companies that we just talked about, the Apples, Amazons, Microsofts, Googles, whatever, and they start to sell them because they just think they're overvalued, will they put money into other parts of the market, or will they take their ball and go home? Because if they do that, that puts the entire market at risk.
I mean, look, the market is slightly overvalued. If you look at the historical context, the slim majority of stocks are trading north of that 20 times threshold. But I think if you look at the tech sector and the companies more specifically, I think they are not in nosebleed territory, at this time. It's really about how do you identify the companies within the sector that can continue to drive growth in new forms versus relying on third parties like advertisers to come onto their platform.
And Bill, I see itching to jump in here.
Yeah, just think about it for just a minute. In 1980, when energy had all the top names, there was no indexing. Now, 50 to 70% of the large cap money is agnostic indexed. If history is any guide, and this is the best of times that FANG will ever see, and whether it be a year from now or 3 years from now or 4 years from now, when it runs out of gas, the index is cursed. The agnostic investor is cursed by this concentration because the indexes are going to be at the mercy of this massive concentration. The last time this happened is when the dot-com bubble broke. Tech was about the same part of the S&P, and it went down 80%, crucified the index for 40%, and yes, some money did trickle into the other ones, but as Rob Arnott at a research affiliate pointed out recently, the gap between value and growth has virtually never been this big, and certainly it's gone on longer. So you would expect the misery to be more substantial when it finally happens. So the beauty of it is, I tell people, you can't hold your breath until these fangs break. But when whatever set of circumstance, and by the way, we think it will be underlying economic growth driven by 90 million millennials wanting the things that 65 million Gen Xers wanted in the household formation. You saw the housing starts today. The housing starts are going to explode. Auto purchases are going to be great because people are waiting until they're 30 to get a driver's license, but we're growing driver's license the fastest we have any time in 50 years.
There's a lot, Bill. I've got to listen. I love the passion. I love the context. I think it's an important topic. I've also got a clock that I've got to adhere to. So, Bill Smead, we'll get you back on again with James. It's an important topic. Market structure certainly maybe the most sort of unknown thing out there. All right. A big surprise in the housing market with home building surging to a 13-year high in December. Diana Olick live in Washington with some of these big-time numbers, Diana.
Yeah, really big time, especially for the big builder stocks today, Brian. The home construction ETF, that symbol ITB, is hitting a more than 18-year high. And that's after a pretty big run-up just last year, all thanks to December housing starts, which jumped nearly 17% for the month and were about 41% higher annually. That's the highest level since December of 2006. Now, break it down by type. Single family up 11% for the month to the highest level since June of 2007. Multifamily also surged 32%. Regionally, starts were strongest in the Midwest and the South. Single family was weaker in the West and Northeast. Now, building permits, which are an indicator of future construction, they were down for the month for both single and multifamily, but single family was almost 11% higher compared with December of last year, while multifamily about 3% lower. Now, low mortgage rates are driving demand, and builders are finally shifting to those cheaper products. So that's why we're seeing all this demand now. Brian?
All right, Diana Olick with some big-time housing numbers. Thank you very much, Diana. All right, do not go anywhere, folks. We are just getting started. Here's what else is coming up on The Exchange.
Coming up, the head of the Business Roundtable tells us what corporate America is saying about this week's big two trade deals. Plus, the markets continuing their historic run. Will it continue? We'll get the technical take. And a triple play for Facebook. A lawsuit, a change in its WhatsApp strategy, and maybe TV shows aren't a great bet. This is The Exchange on CNBC.
This piece is talking to me.
Yeah? How can it be fair that millions of people in the world are denied access to clean water? At WaterAid, we need your help to create an equal world. Whether you're from Morden or Madagascar, everyone, everywhere should have access to clean water. Because clean water changes lives. You can help WaterAid change the picture. To find out how, search WaterAid Radio now.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night. And somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here. Testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Fly with Cathay Pacific and arrive ready to make the most of the endless white beaches of Bali. Book now at cathaypacific.com. Cathay Pacific. Move beyond.
Perry Bikers here. This message goes out to something very special.
Yes, we're talking to you, chicken.
Maybe we've been seeing too much of each other.
But times have changed, Dave.
We've been cheating on meat.
Thing is, no stocks make veggie dishes so irresistible that cheating on meat is proper tasty.
Oh, dear chicken, you were the fire in my life. But it's all about you now, aubergine katsu curry. Prepare to be wined and dined, my love.
Cheat on meat with no veggie stocks.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. At all protected.
And welcome back to The Exchange. Has the signing of the Phase 1 trade deal and the new NAFTA helped boost CEO confidence? Yes, so says your next guest. Let's find out why. Steve Odland is president and CEO of the Conference Board and a CNBC contributor. And Steve, is it because they're glad that this uncertainty is sort of, kind of, mostly off the table? Or is it that they maybe believe that those two deals signed this week are going to actually help the economy?
Well, I think it's a little bit of both, Brian. You know, first of all, CEOs hate uncertainty. And we've had this trade skirmish going on for almost 2 years now, and with promises of ever increasing levels of tariffs and, you know, whatever else came. Lots of threats going on back and forth between the U.S. and China. So, too, on the USMCA. You know, these are our biggest trading partners with very integrated supply chains in North America. And that's been sitting there as well. So this past week has really been a great week. And CEOs are very happy with the level of certainty. Now, the naysayers will say, well, the China deal didn't go far enough. It didn't provide big enough protections. It didn't, yada, yada. But I think the point is we have some certainty. We have some peace. The new tariffs are not going into effect, and we've promised to go and start talking on phase 2. USMCA allows investment north and south. Remember, NAFTA quadrupled the amount of trade north and south with Canada and Mexico. This is all good, Brian.
Is there any negatives here, Steve? It can't all be good because we still have tariffs, as we talked about yesterday. We don't have phase 2. We don't have a lot of concrete yet, do we?
Yeah, no, and we haven't solved global warming, and China's not democracy. But yes, this is what people say. It doesn't go far enough. But I think, remember, the first thing with CEOs is they need some level of terra firma in order to plan going forward. And now we have that. You know what it is. If you know what it is, even with the tariffs, it'll go forward. And I think most CEOs are savvy enough to understand that the tariffs can't just be on China's side. We had to put them in order to create a negotiating platform. So now the question is, will China abide by this? Will they start abiding by the WTO rules? Will they start providing the IP protections? Will they really stop demanding the turnover of IP
what do you
to
think?
the state-owned enterprises?
It's all this little matter of actually doing what you say you're going. That's the hard part, right?
That's the hard part.
Do you think they will, Steve?
They have been prickly on this, Brian, and this is the key thing. We've got to watch, because if you see any sliding on their part, then it just means that they're going to ignore the whole thing, and then the confidence will go. You mentioned CEO confidence. CEO confidence had been going down throughout the course of 19. It's now starting to percolate back up. So the trade deal has had a big impact on CEO confidence. And remember, consumer confidence globally just came out. The Conference Board issued it last couple of days, and globally we're at all-time record highs. It's been very good, for the past couple of years. The U.S. is sitting at a record high. So consumers have been ahead of the CEOs in confidence for the past couple of years.
Well, now that we've got the USMCA done, the new NAFTA, do you believe that the people that had been sort of holding out, investing in stuff in Mexico will now put that capital to work?
I think that's right. I think Mexico will be the greatest beneficiary because they're the natural place for manufacturing. Remember, wages go up. The amount of content in cars goes up to 75%. So I think that jobs will be created in all three countries, but Mexico will be in great shape. So this is really good. Now, here's the deal, Brian. We've got China, now settled a little bit. We've got USMCA. Now it's Europe. In 2020, it's going to be an interesting situation, both with airplanes. You've got the whole Airbus Boeing situation coming off of the 737 MAX. And you have the German automobile industry where, the administration has been making a lot of noise there. Those are the two areas to watch in Europe in 2020.
All right, Steve Odland, we appreciate the views and a little bump there in CEO confidence. Steve, thank you very much. See you soon.
Thank you.
All right, on deck. Why and where there's a bit of a growing crisis in the job market and what's being done to solve it. Plus, Snapchat shares, they're up 230% in a year. But Steve Grasso says that run is not done, and he is with us ahead. And as a reminder, you can always watch us or listen to us live on the go on the CNBC app. Check it out. We're back in 2 minutes.
Keys, check. Phone, check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Chilly January days in London are tough enough without a broken boiler. Keep your home warm and working this winter with 2 years interest-free credit and your boiler installed by one of our expert engineers. Plus, you'll get a 5-year British Gas warranty. And we can even quote by video call after work or on weekends. Get a quote by the 29th of February, and you can also get £200 off a new boiler, or £400 off for our existing home care customers. Search British Gas New Boiler. Conditions apply.
At
At TUI, we're spreading sunshine early by giving away hundreds of thousands of free kids' places. So you can holiday with the little ones for less. Book today and spread the cost with £0 deposit when you pay with direct debit. From splash parks to swimming lessons. At TUI, we cross the T's, dot the I's, and put you in the middle. Direct debit on web bookings only. Free kids' places subject to limited availability. One free child place per 2 full paying adults. Booking T's and C's apply. At all protected.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
All right, welcome back. You can call this stock rally whatever you want. Deserved, overdone, Fed-induced. But whatever you call it, it has been a juggernaut. And much attention now is being posed to one simple question. How long can this possibly last? Let's now bring in Steve Grasso, Director of Institutional Sales, and Stuart Frankel for a little bit of technical analysis and chart magic on this rally. What do you think, Steve? A lot of gas left in the tank?
Yeah, you know, the way you have to look at technicals, Brian, is you have to look at from where we came and where we could possibly go to. So why don't we just look back at this chart? So what's missing is that we didn't want to go so far back to lose a lot of the context. So let's go back to September and December of 2018. We went back to a level basically on the dip to 2350. Where did we come from, basically, was around that 2,900 and change level. So if you take these two in context and you spit out some overshoot levels, you come up with pretty much where we are right here, but let's call it 33.95, all the way up to, if you want to talk about real gas left in the tank, 35.35. Those are two tremendous levels. So we're going to lose a lot of bears and a lot of rational people if we spit out this number. So let's forget about the 35.35. This is the next logical resistance level for us. It's totally reasonable, about 2% up from here. If we have to dive here, that's about 6% up from there. But let's be rational. What happens if this doesn't work out? So what you want to look at is the 20-day moving average, which is basically your momentum indicator. And where is that level? 32.50, let's call it.
Okay, that's the level we've got to watch. If we start to roll over a little bit, 32.50 might be some kind of support. That, Steve, is a very good-looking chart. A better-looking chart, at least in the near term, is, I think, your favorite single stock right now, and that is Snapchat.
Exactly. So for me, I've been involved in this trade. I've recommended this trade. I've been on Fast Money. I pointed out charts on this trade. So for me, I'm long it around $14. Now when you start to see, I think you mentioned it the other night on air, Brian, the $17 mark. That was what? The IPO price of Snap. So once a stock hits the IPO price after being below for so long, naturally what you get is a lot of buy-through buyers. And immediately, once you hit that level, what does the analyst community do? They start raising price targets because they don't want to look foolish, right? So it's human nature. So now we have a street high today of 24 that UBS put on it. And that was a matching street high. There was already a 24 on it. And most of them are clustering around $20, $21. JP Morgan is a $20 price target. Where do I think this thing goes? I think it probably goes to 21, to 24. And if you start to eclipse that, I think you have a real potential here to break out substantially. So everyone gets nervous on Snap, Brian, because of where it came from. Look at this level right here. So everyone says, oh, my Lord, I don't want to be involved in any stock like that. I'll tell you one thing. These are the only stocks I want to be involved in with charts like this. So I think you have the ability rationally, 21 to 24. I'm staying long. I think I'm going to get $30 out of this stock.
Wow, $30 call on Snap. I know you've been right on the mark on this, Steve Grasso. Thank you very much, buddy. We appreciate you joining us. See you this weekend, all right? Take care.
Thanks, bud.
All right, let's get a CNBC News update. Here now, once again, is Sue Herrera. Sue.
Hello, Brian. Hello, everybody. Here's what's happening at this hour. White House economic advisor Larry Kudlow telling reporters that Judy Shelton, one of President Trump's picks to serve on the Federal Reserve Board, should have no trouble winning Senate confirmation.
I think she will work very well inside the Fed. She's a brilliant woman. She's had a lot of experience in top jobs, including this current position in the Bank for Reconstruction. And she'll be a good addition to the board.
The CDC now says that the flu is widespread in every state except Oregon and Hawaii. 32 states are reporting high activity, which is actually a decrease from last week's 33. More than 6,600 people have died from the flu. And art experts have confirmed that a painting discovered hidden inside an Italian art gallery's walls is indeed Gustav Klimt's Portrait of a Lady. It was reported stolen from the gallery nearly 23 years ago. Questions still unanswered: who took it, and whether it actually ever left the museum's property. It's a whodunit. That's the news update this hour. Brian, back to you.
Sounds like maybe it's a no one done it.
It could be.
Would they just plaster over the...
Maybe during construction. Who knows?
Was ist das? Let's just build a wall. All right, Sue Herrera, thank you very much. All right, here's what else is coming up on the exchange.
Ahead, Facebook may be scrapping one of its most controversial plans. Fitbit may soon be able to monitor your oxygen. One sector can't find the right employees, so it's spending big to woo them. And it's not the sector you think. It's all coming up on the exchange.
1 in 5 Americans have left.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Witch Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Here at Tesco, we're celebrating over 100 years of great value, with even more great prices that take you back. Like a 4-pack of Magnum Classic ice creams, now half price, from £3.20 to just £1.60, all this week at Tesco.
Selected larger stores subject to availability. Offer ends 27th of January.
Down the middle of the 10, got to the 5, tumbles in, touchdown!
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Facebook, Fitbit, space, and football owners are a bit upset. It is time for What Else Rapid Fire. Here now to talk about it, Eric Chemi, Morgan Brandon, and CNBC contributor Ed Lee, reporter for the New York Times. All right, first up, according to reports, Facebook is pausing the rollout of ads within WhatsApp, though it says it still could be a long-term possibility. Remember, Facebook bought WhatsApp for $22 billion in 2014 and is yet to really monetize it. Now, that's not the only Facebook news today. It also reportedly canceled 2 of its most heavily marketed TV shows as part of a shift toward unscripted content. Ed, I don't know why, maybe you do, why they canceled the ads, but the idea, I guess, of an ad is that they track what you do. The ad is targeted. If WhatsApp is supposed to be encrypted, theoretically, they shouldn't know what you're talking about to target the ad.
What are they targeting you with? Also, WhatsApp users are not used to an ad environment anyway, right? So if you're used to Facebook, the regular Facebook Blue, yeah, okay, I see ads in my timeline, that's fine. On WhatsApp, if I see ads there, it's sort of like it ruins or changes the.
Also, how does it work? Because you don't have a feed. It's basically if people haven't used WhatsApp, it's like getting an ad on your text messages.
They're created, like they try to create a section that looks like Instagram stories where you see a bunch of different things scrolling at once. Again, they're trying to shoehorn in one product into another. It doesn't really work.
Well, Morgan, they got to make money from it somehow. They spent $22 billion for it.
And this is one of the reasons that investors continue to be, and Wall Street continues to be so bullish on this name, because of the opportunity to monetize WhatsApp. I wonder why they don't just go back to more of a subscription model, maybe, which is what was kind of in place, 99 cents a year before Facebook bought WhatsApp.
But I think that's why they buy companies. Like, we're Facebook, we bought you, we want you to be us. We don't have a monthly fee, we have ads, so we want you to look like us.
But if you're not going to utilize and leverage that data against ads, for example,
theoretically, because WhatsApp is encrypted, they shouldn't know the data. And I think by putting ads there, they are implicitly acknowledging that they're reading your WhatsApp
Unless they're
message.
non-targeted. They could just be ads.
Like on regular
But then, so on my WhatsApp feed, I'll get an ad for something I'm completely disinterested in. That doesn't serve much purpose.
I think monetizing is the correct. You're not going to pay $22 billion for something you're not going to monetize.
Yeah.
I think they're trying to move more to customer service.
Customer service, payments, which could make a lot of sense.
Round the horn, how much would you pay for total privacy a year on WhatsApp or Facebook? $100 a year?
Yeah, probably.
Or there are plenty of other services now that you can free or near free that have privacy that aren't owned by Facebook.
Okay, topic 2. Fitbit bringing blood oxygen monitoring on some of its devices. The new feature can be used to detect changes in breathing during sleep. Remember, Google is now going to own Facebook, Eric Chemi. Fitbit. Does that make this?
That would have been a breaking news headline.
Facebook and WhatsApp.
Hey,
that
if
was
Google ever buys Facebook, you're going to come back and apologize. Say, Sullivan, you were right, man.
Exactly. Breaking
that slip of the tongue.
We just talked about.
Does this bother you?
Yes. So we just talked about all of the WhatsApp, the tracking, the encryption. So with Fitbit now, if they're going to have all this extra data, but it's owned by Google, and Google, as the Wall Street Journal reported just a few days ago, they've got all these deals with hospitals. They are going big on medical records, health records. I don't think most consumers want Google to have this much information about you as a person. So we're already tracking your emails. I know everything you're searching on Google. I know all the videos you're watching on YouTube. Now I know everything about your health data. That seems scary. That seems like a lot.
Yeah, which I think is exactly why
I think that's concern, right? Exactly.
Yeah.
Sorry to interrupt there.
Go ahead.
I think in this case, though, it's as much a move to differentiate themselves from Apple. You know, what can we do with this that Apple doesn't do? And so it feels incremental. I think there's definite danger there. I don't know how smart Google ultimately is in trying to combine all these different things. They're a big, smart company, but they have a lot of missteps as well. I don't think it's as sinister maybe as it.
Yeah, and I don't think this deal has actually fully cleared all the hurdles. Shareholders have voted for it, but there's still some, regulatory review that's happening as well. But there were reports after this acquisition was announced that you had people that were canceling their subscriptions, to your point, of Fitbit because they were worried about the privacy.
There are people that are just worried about Google. I mean,
the other thing is, are you going to want to sleep with a Fitbit on your wrist?
I think you're supposed to. It
A lot of
shows
people
when
do
you're
already.
asleep and
No,
how
but
long
I'm
you
saying,
sleep.
like, that doesn't sound very comfortable to me.
I used to wear the Fitbit when I was doing the 5 a.m. show, and I was so depressed by the data on sleep that I had to take it off. It was like
That was me when I was working out.
2 hours, 45 minutes.
But now Google will know in advance that you're depressed.
I know that I'll get ads for antidepressants in my Gmail feed. It all works
Exactly.
out.
It all works out.
All right, everything's fine. Topic 3 is out of this world, Morgan. SpaceX preparing for its last big test before human spaceflight. Tomorrow, it will launch a Falcon 9 rocket. Then, 90 seconds later, which I'm told is the moment of peak mechanical stress, the Crew Dragon capsule will separate from the rocket, float down to the Pacific or the ocean with a parachute. And if all goes well, it will take American astronauts into space. Morgan Brennan, this is your beat. You know, you've forgotten more about it than I've ever known. But it kind of feels like 1962. We're going to put a guy in a capsule and he's going to come down via parachute.
That's exactly why they're doing this test. This is called the in-flight abort test. It's the last final big test for SpaceX with this Crew Dragon. If it goes well tomorrow, next couple of weeks to next couple of months, you're going to see astronauts get on board this thing and start flying up to the International Space Station.
What's this model here?
Stakes have never been higher, especially given what happened with Boeing's Starliner test last month.
Which did not work. It
did not make its way to the International Space Station. Unclear whether that's going to have another test before astronauts
So
get on board.
if this works, Morgan, what does it mean?
If it works, they assess the data. NASA gives the green light. There's a date. The next Crew Dragon capsule is shipped down to Kennedy Space Center. Astronauts get on board, maybe before the end of the first quarter, and we actually start being able to, for the first time since 2011, put astronauts in space from U.S. soil.
Can we say, arguably, that if this goes well, and it looks like it is, that this is a time where the private sector and the public sector have really worked in harmony? They've worked together.
This is a quintessential public-private partnership, and it is being watched very closely, not only by those in agencies like NASA, but also the Defense Department across the board, a new way of potentially doing
What's the business
things.
model? Is this just for astronauts? Or are we going to start to see high net worth individuals go take space tours?
Wow, I'm so glad you asked that question, because NASA has already said once this is operational, once these two spacecraft are certified, that they are opening it up for private astronauts to be able to pay for tickets and go to the International Space Station.
So there'll be a day-
And possibly as soon as the end of
We
this
can
year.
go to the International Space Station.
Exactly. Commercializing
You
space,
just
that's
need like
really...
tens of millions of dollars.
And also,
but yes.
how much training would that require? Like, you're not just going to be like, okay, Chemi, you're
Yeah,
up.
no, you're gonna
You gotta
train.
know.
You have to train.
Race car drivers, pilots, astronauts, it's all similar.
I've never slept in zero gravity.
Not yet.
Maybe Fitbit, whatever it's called.
Oh, yeah, imagine how that's going to be the
It's
data.
all connected. How's your blood oxygen up there? All right, finally. New Carolina Panthers owner and hedge fund billionaire and well-known CNBC guy David Tepper is backing up the truck to hire first-time NFL coach Matt Rule from Baylor. Rule reportedly getting a 7-year deal worth $60 million. The move has some league owners hot under the collar, and CNBC.com sports business reporter Jabari Young is here to tell us why they are so mad. Jabari, welcome. What did Tepper do wrong here?
Yeah, well, he did what he wasn't supposed to do, according to some owners. Now, listen, I don't count David Tepper's money. I don't have enough time to, because he got a lot of it. But, you know, when you raise the prices, as one person put it, you raise the price of pork. You know, these first-time head coaches, they usually come in on 4-year deals, 3-4-year deals. And what David Tepper did is he gave a guy 7-year deals. This guy's never coached in the NFL, never won a Super Bowl. He's a Temple guy, which I love.
Never won a national championship.
Yeah, but he's a
football
Temple
either.
guy, so he deserves some of that money. All right, we were Temple dudes, but he's never won a Super Bowl, and you have him making about $8 to $10 million a year. Now, Bill Belichick makes about $12 million a year. Pete Carroll about 11. Mike Tomlin and Sean Payton are in that mix too. So if they're making that, and they've won Super Bowls, and yet Matt Rule comes on the scene and makes $8 to $10 million, I want to raise.
This is like a classic country club situation, right? The NFL is the biggest country club there is. It'd be like you go to your country club and now you're tipping your caddy $1,000 every time you play around
And
the
so the
golf.
guy I golf with
Everyone
is now
else is
feeling
like,
like a
come
cheat.
on.
Yeah,
you're
Comparing the coach to the caddy. I think that's exactly right. I don't get what Tepper's doing here, really. I like the idea that you want to give some guy a chance, but yeah, a 4-year deal, maybe $3-4 million, that's what you're expecting for the guy. As soon as you raise the price like that, the economics
But
of
that guy had
savvy
like 10
change.
years at Baylor, though. He had like 10 years at Baylor.
No, he
so
didn't
you
have 10
gotta
years.
try
He
him
was
out.
only here for like 3.
No,
He was
but
like,
he had a long career.
I think Ed's point is very good, which is that Jabari, the risk is then the assistants. It's not just that all the entire staff says, well, wait a minute, I need to I need to make more because I was making half of the head coach. Well, now half of that is a lot
Coaches
more than I was making.
Coaches are interesting because they are employees. They're not management, but they're not part of a union.
No.
So players are in a union. Owners control that union. But the coaches are just this other thing, and that's what makes these
It's a
interesting.
secret society, too, because remember, coaching contracts are not a part of the salary cap, so they don't be reported. So that's why a lot of people like to suppress the numbers, so they don't have to.
I'm going to put you on the spot.
Yeah.
Okay, I apologize in advance. Who's the lowest paid coach in football? Do we have any idea?
Again, the salaries aren't reported.
We don't know.
And once that guy finds
it better be, I don't know, who do you think it is? I have no idea. I'd love to know who the lowest paid coach is.
Well, it ain't Matt Rule, which he should be.
The reason I ask is whoever that guy is probably going to get a slight raise. I mean, I would assume.
Also, that person has more NFL experience experience than Rule coming in.
But I wonder, mind you, my lowest grade in high school was gym class, so I'm not like, it was, so I'm not like the best sports person. I'm not the best sports person, but I wonder, you bring somebody like this in. Tepper has basically said he sees this as an opportunity, a person who could help build out this organization for 30, 40 years. Yeah. Maybe the fact that he was on the college circuit, he has an eye for the up and coming talent. You have Tepper, who's who's new to the game, and he's looking to recruit some of the
and he's a Steelers guy. So if he's going to go to do the Art Rooney, model, which is you bring a coach in and you let him coach no matter what, and you let him succeed, I'm fine with that too. But it's his money. He can do whatever he wants.
Well, if they go 12-4 for 3 years, it's fine. If they go 4-12 for 3 years, things aren't going to be good. Jabari Young, thank you very much. By the way, you can read Jabari's story. Go to CNBC.com. All right, Eric Chemi, Morgan, Brendan, Ed Lee. Also, thank you all very much. Rapid fire, like Seacrest, out. Let's get a market flash now on Boeing. Sue Herrera has the details. Sue.
I do indeed, and Boeing has been moving lower on this ABC report. The reporter tweeting out a short while ago that during a testing audit last weekend, the 737's two flight computers were not talking to each other at startup. Unclear how long the fix will take, but it will be done as other return to service work is conducted. We reached out to Boeing, and this is the statement that they just put out. Quote, we are making necessary updates and working with the FAA on submission of this change and keeping our customers and suppliers informed. Our highest priority is ensuring the 737 MAX is safe and meets all regulatory requirements before it returns to service. But as we mentioned, Boeing's stock did move to session lows on that ABC report. Boeing has now responded. We'll see whether or not that moves the stock off of its lows of the day, down just under 2%. Brian, back to you.
Well, okay, big news there. Thank you very much, Sue Herrera. I'm sure we'll get more on Boeing as the day progresses. Coming up, presidential candidate and entrepreneur Andrew Yang speaking candidly about the markets, the economy, and the threat, perhaps, of Huawei. Deirdre Bosa sat down with him. We're going to have that coming up for you next.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs. Small jobs, big jobs, work from home in your PJs jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
On a TUI tour, our English-speaking local guides will take you off the tourist trail. They won't just help you find the perfect souvenir, they'll show you how to make it. Choose from over 70 unforgettable tours worldwide. From tranquil temples in India to sunrise safaris in South Africa. On a TUI tour, we cross the T's, dot the I's, and put you in the middle. Book now and enjoy up to £200 off per booking. Booking T's and C's and minimum spend applies. Selected holidays only. Atoll protected.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Along the goal line, scores and tucks it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores! And you can hear the action live on TuneIn Premium.
Move, hit a shot,
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Well, we are just now 17 days away from the Iowa caucus, and the 2020 campaigns are in full swing. Deirdre Bosa got a chance to do a kind of a rapid-fire interview with presidential candidate Andrew Yang last night. She started with a question that we've been asking here at CNBC. Is the stock market overvalued?
Overvalued.
Big tech, regulate or break up?
You can't oversimplify to that extent. You need to actually dig in and solve the problems you're concerned about.
Recession in 2020, likely or unlikely?
I'd say a slight downturn in 2020 is very likely.
What would you do?
I would start putting more economic buying power into people's hands so that we have a trickle-up economy.
Private markets, frothy or not?
Definitely frothy. I mean, did you see what happened at WeWork? And they're not alone.
Harder job, Zuckerberg or Bezos?
Wow, they both have very hard jobs, but I'm going to say Zuckerberg.
Huawei threat, over-exaggerated or underappreciated?
It's real, so I don't know if that means that it's underappreciated, but it's real.
Now, Yang also said that of all the media platforms, he likes Instagram the best. Well, manufacturers are set to spend big money this year to fix a persistent industry-wide problem. We'll tell you what that is and the measures they're taking next.
The Exchange is now a podcast. Listen to your favorite parts of the show you might have missed. Sign up now on Apple Podcasts, Spotify, Stitcher, and Google Podcasts.
Our retirement plan with Voya gives us confidence.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Peoples of London. Cooking for family and friends is a real hassle, Sergey tells me. So I, Alexander, occasionally take care of marvelous dinner for whole family. Which means we all go out for meerkat meals. Exactly. How did you guess? Get 2 for 1 on food for up to 6 people at your local favorites, like the Yacht, with meerkat meals. When you buy, so compare the market. Qualifying purchase, app only, 2 for 1 on selected food, participating restaurants, a la carte only, Sunday to Thursday, T's and C's and exclusions apply.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown.
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
skills gap is impacting industries across the country, and manufacturing is no exception. With nearly 500,000 open jobs and a shortage of available talent, companies in the sector are gearing up to spend big on training this year. Kate Rogers joins us now with more. Kate.
Hi, Brian. That's right. The inability to attract and retain talent has been the #1 challenge for manufacturers over the past 9 quarters, according to the National Association of Manufacturers, which cites that skills gap as a major concern for its membership. In fact, nearly 79% of manufacturers say they have openings that they're currently struggling to fill. Now, to help close that gap, new data just released from the Manufacturing Institute finds that companies in the sector are projected to spend at least $26.2 billion in 2020 on training initiatives for existing employees, that's known as upskilling, as well as training programs for new hires. Now, investing in this talent pipeline is really key. NAM projects 4.6 million manufacturing workers will be needed by the year 2028, but 2.4 million of those jobs might go unfilled if the skills gap isn't closed. The Manufacturing Institute has set a goal, Brian, of shrinking the skills gap in the sector by 25% over the next 5 years. Back over to you.
All right, Kate, why don't you come on over here, because to help us get a better understanding of the skilled labor crisis facing what Kate just talked about is Carolyn Lee. She's the executive director of the Manufacturing Institute, the educational workforce partner of the National Association of Manufacturers. So, Carolyn, is the industry confident that this money and this training is going to work? Does it look like it is already?
It does. You know, we have 2 problems in the sector. We don't have enough people with the right skills, and we have a perception problem. So we need to double down on both investing in training, and that is what the report that came out today is all about. And we need to change the perception of the sector, and that's what we're going to do throughout 2020.
Are these 22-year-olds? Are they 18-year-olds? Are they 52-year-olds?
It's all of the above. We need an all-of-the-above solution. We've averaged about 500,000 open jobs for the last year. And so we have those jobs today, and as Kate said in her piece, we're going to have 4.6 million jobs that we need to fill between now and 2028. So we need to do all of it.
Carolyn, this is really having a big impact, I know, on NAM's membership. I think about a third of the workforce, of the companies that were surveyed said that they're actually turning down job opportunities because they don't have the skilled labor needed in order to complete some of the work that's coming in. So what does this mean for the sector as a whole if these jobs can't be filled?
Well, if these jobs can't be filled, then we're not going to be as competitive. And that's why there's no looking at what might not happen. We have to dive all in, and that's what the sector is doing to rise to this challenge, to change the perception so that tomorrow's workers come into our sector. And that's what we're doing through our Creators Wanted campaign, and also train those workers that we have today, because the worker you have today is the next job you need to fill.
Carolyn, you know, one thing that I've been talking about for a couple of years here is so-called geographic mobility. I mean, when I was 15, my family packed up our stuff and moved from San Diego to Virginia, basically to start over. You know, if you're in Flint, Michigan, and you're underemployed or unemployed, and you'd like to move to Huntsville, Alabama, where there's a new car factory, but you can't sell your house without going into Hawk, you won't go in a lot of cases. What else can we do to get maybe the skilled workers to where the jobs are?
Well, we need to tell the story. You're right. We need to show people where the jobs are and talk to them about the opportunities and talk to them about what this future in the sector, so they can make that leap and take that opportunity because they know they'll have a growth trajectory. And that's what this story about the investment in training is really about. It means that your job will be continually evolving. You'll be upskilled and you'll be rising to new challenges. So you'll have an interesting career ahead of you, not just a job.
And I will add, too, just in covering this, I mean, the average manufacturing worker made almost $90,000 last year, according to NAM. So these are very good paying jobs. A lot of them have benefits. We talked to a company yesterday that's offering all kinds of things, including 401ks with matches, in addition to all of this training that's being done. So it is a career. It's certainly a good paying one. And as we know, there are a lot of open jobs.
Well, but there's a lot of people around the world, Carolyn, who are also looking for a job. And if we want to have, competitive manufacturing, we probably need workers, as you said. Where does immigration fall in this debate?
Look, we know we don't have enough people. We're at historic low unemployment levels, and we have a huge amount of open jobs. So we need everybody who is interested and has the capabilities to come to our sector. And that means part of the solution is absolutely immigration, and it's absolutely upskilling, reskilling, attracting more people in away from other sectors, and making sure we're reaching those high school students who are the next worker and ready to come to the sector very soon.
All right, Carolyn Lee and Kate Rogers, important discussion, big topic. Thank you both very much.
Thanks so much for having me.
Well, shares of Southern Company, a little higher today, but they got an upgrade from KeyBank saying despite rocketing last year, this energy and utility company still has a lot of room to run. We're going to find out why with the analyst behind the call next.
Deeper data at CNBC. December container volumes at the Port of Los Angeles fell 17.3% from year-ago levels. It is the fourth straight month of year-over-year declines.
So, Schwab, tell me about whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs, new year, new you, new job, jobs, first jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, small jobs, big jobs, work from home in your PJs jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit tunein.com/premium to upgrade.
Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Well, it has been a good week for the utility stocks and their investors. The sector hitting another all-time high. One of the drivers of that move has been Southern Company, who's also sitting at lifetime highs. What's driving utilities and why is Southern in the sweet spot? Let's bring in Sophie Karp, equity research analyst at KeyBank Capital Markets, just upgrading it to a overweight from a sector weight. Sophie, welcome to the program. Pardon my cynicism, but why should anyone buy a utility, boring old utility, right? Regulated growth that's already up 30+% in a year?
Hi, thanks for having me. Well, I'll tell you why. Because Southern is a premium name, and despite its run that it had in 2019, it is still trading at a discount to the large regulated peers, and we think it should close that discount and then proceed and trade at a premium over time. People forget that historically Southern operates in extremely constructive jurisdictions. Georgia, Alabama, Mississippi are prime jurisdictions for electric utilities. They business-friendly places. They're open for business. We've seen constructive treatments there. And Vogel, which has been a major overhang on Southern Company over the last few years, I would say, is coming to a close. And we think we're ready to look past that and look past those overhangs, especially considering that Southern has consistently met all of the important milestones on the project since they took it over from the subcontractors. So we're actually quite positive on it. We think we're going to see a tightening of those milestones this year and more definitive timeframes for those. And we think that the investors will look past that as well as Vogel begins to enters the into service.
How important, Sophie, is it where they operate? They are, as their name might imply, I'm breaking news here, Southern. They are in the South, where the sort of the regulatory framework might be a little looser or more friendly versus, say, a highly regulated state like a California. Does that help them?
Well, and utilities are regulated everywhere. It's just how they regulate it, right? And Vogel operates very efficiently, and because of how well operated and how well run this company has always been, they've built strong relationships with the stakeholders in their state. And that includes, their customers and their regulators as well.
So how much more room to run do you realistically believe Southern has, Sophie?
Well, I'll tell you what, Southern trades at about 2 turns discount to the average of the large cap regulated peers, and we think it could go and trade at a multiple at 2 or 3 turns premium longer term. That's what we've seen there historically pre-Vogel, and we think once Vogel kind of moves to the rear view mirror, this is where Southern's going.
Sophie Karp, KeyBank Capital Markets, upgrading. Who knew the utility stocks were going to be one of the best performing sectors the last 12 months? It sounds like you did. And Sophie Karp, we certainly appreciate you coming on the network. We'll get you back on again soon. Thank you very much. All right, so folks, you hear a lot about ESG investing, environmental, social governance, right? Well, is it just talk? It is not. Tonight on Fast Money, we're going to have the CEO and chairman of BNP Paribas Americas to talk about ESG investing. And it's not just we're going to make a loan to buy a windmill. Have you ever heard about debt issued by major companies that fluctuates in rates based on carbon emissions goals? They exist, and the industry is booming. We'll talk to Jean-Yves Fillion tonight on Fast Money. I'll see you there for 5 p.m. Eastern Time tonight with that guy. It's going to be an interesting interview. It's going to open your eye, trust me, on a topic that many people are skeptical of. By the way, markets, new record highs, but a great week. I'll see you at 5 p.m. tonight. Meantime, Power Lunch begins right now.
Brian, thank you very much. Welcome, everybody. I'm Tyler Matheson, and here's what's new at 2 on Power Lunch for a Friday. Stocks, indeed, marching to record highs, and some of Wall Street's biggest investors are doubling down on the market should you join the billionaire bulls. Plus, a new sign the economy is on fire. The number of people building new houses is at a 13-year high. We've got those details. And later, the CEO of bank disruptor Chime finalizes a multi-year deal with the Dallas Mavericks. The co-founder and CEO Chris Britt will join us as Power Lunch starts right now. And let's get a check on the markets. Stocks are higher, hitting record highs again today. And get this, the Dow is on track for its best week in nearly 5 months. There you see the industrials basically flat, nevertheless higher. Welcome, Morgan. How are you?
Great, Tyler. It is great to be with you this Friday afternoon. Record-breaking rally has been led by the biggest names, Google joining Apple and Microsoft in the $1 trillion club. And for more on that impact from those mega cap stocks and what they're having on the market, we're going to go to Seema Modi at the New York Stock Exchange. Seema.
Hey, Morgan, and the reason we care about these milestones is because Alphabet, Microsoft, and Apple collectively make up about 13% of the S&P 500, and all three are sitting on gains for the year, really setting the bar high for earnings this season. Now, valuation metrics for these three tech companies shows that Alphabet is the only one that is trading at a discount to its 5-year average of 34 times earnings. Microsoft and Apple are both trading above their historic PEs, with Apple in the 15 to 16 range typically. Now, the average price target on the street for Alphabet continues to rise, currently at $1,516 a share. And UBS and Evercore among the sell-side analysts raising their target on the stock this week, citing strength in its cloud business. Now, some tech names are actually sitting out on the rally this year after a huge surge for semiconductor stocks. Broadcom and Intel are down on the year, coming off a more than 20% run. Morgan, back to you.
Seema, thank you. As the race to records rages on, two big billionaire investors are doubling down. David Tepper of Appaloosa telling CNBC he, quote, loves riding a horse that's running. And fellow hedge fund manager Stanley Druckenmiller saying in the race, staying in the race, I should say, saying that I am still riding the horse and is still bullish, immediate term. It's not certainly their first rodeo, so definitely insights we pay close attention to. Should you keep buying stocks at record highs? Let's bring in Michael Kantrowitz, Chief Investment Strategist with Cornerstone Macro, and Ron Insana, Senior Advisor with Schroders North America and a CNBC Senior Analyst. Welcome to you both.
Thank you.
Thank you.
Stocks. Valuations right now. I know.
You sure about that?
Are they expensive to you or valuation stretched?
They're expensive, but I think expensive and overvalued can coexist, can be different. It doesn't mean that they're overvalued necessarily. They're expensive because of, I think, 3 reasons. Interest rates are low, credit spreads are tight, and the composition in the S&P today is very skewed towards technology, growth, and other defensive segments of the market. Unlike, let's say, 2007, where it's mostly cyclicals, which tends to give you a cheaper market.
Ron, do you agree?
Yeah, I do. I would say that, we are, though, technically overbought. You look at the VIX, and it's down around below 12, and we haven't seen it this low for a while. And we've seen meaningful corrections when we've seen this one type of concentration, 5 stocks accounting for almost 18% of the S&P 500 market cap, all those trillion-dollar names that you mentioned earlier, and then the VIX coming down. So, yeah, I think we're probably stretched. I don't think it's the end of the run by any means, but a pullback's always possible.
You say that we're getting close to a pullback, but not a bear market. What tells you that we are getting close to a pullback, and what would trigger it?
Well, I think, number one, there could be some of those same volatility suppression strategies that were going on in 2017, where you were long the S&P and short the VIX, and that keeps vol as low as it's been. The Wall Street Journal did a piece just the other day that this is the 6th longest stretch since October that we've not seen a 1% move in the market either way. So it would either suggest we're in something of a little bit of a blow-off top in technical terms that could augur a pullback down the road. But again, I think it's largely technical, not fundamental, because the Fed is still friendly, earnings are above expectations, the economic numbers have been, as you said earlier, just fine.
So, Michael, where do you see the greatest opportunities right now? What sectors or what names specifically would you be buying into?
Sure. We've been recommending higher quality value, and which lends itself to a more cyclical tilt. While the market's up a lot and PEs have led the way in 2019, we think earnings are about to pick up, and earnings expectations, which have been really coming down for the last couple of years as manufacturing PMI indicators have been weak. We think that all is going to turn around, beginning to turn around in 2020. So we like financials, we like industrials, and consumer cyclicals.
That's what I was going to ask you. Where do you find higher quality value? You just said it: financials, industrials, and some cyclicals. Any names in those categories?
Yeah, so I'm a strategist. We also do quantitative research. So we provide investors with screens. What are the type of characteristics you want to own in a backdrop where manufacturing PMIs and economic data is beginning to improve from low levels? So industrials, but with I would say, a domestic tilt. We think the U.S. economy is going to be driving this expansion in 2020 into 2021. So transportation stocks, machinery stocks. I know a bunch of, there's certainly a lot of names that would fit the higher quality value universe. I certainly don't want to nail it down to 1 or 2 names. It's not what I do. Mm-hmm. But I think stocks that are relatively less expensive than their peers, that have profitable business models today, are good buying opportunities.
So, Ron, you say a pullback is possible. How big of a pullback might be reasonable to expect? Is
typical,
it 10%?
Yeah, that's a typical thing when you get
20,
to. Well, I wouldn't go so far yet. The Fed is still, not only quite easy, but is actively engaged in providing liquidity to the marketplace. So you don't usually see large-scale corrections when central banks are as easy as they've been. They cut 55 times last year around the world. Global markets are all up. Very similarly.
And are the most vulnerable stocks then those that have those trillion-dollar valuation stocks that have run so much?
For a correction, yeah. Again, and we've not seen this type of concentration since 1999.
Yep.
But the characteristics of the market are somewhat different. So you have to be a little careful. The Fed was tightening into the end of that internet bubble cycle and all that type of thing. The one thing I would be very careful of is the high yield, the levered loan market. And I think for individual investors who have fixed income mutual funds, they really ought to go through those and see what kind of risk, what kind of illiquidity resides in those fixed income instruments, where if there is a pullback, that might be more magnified in junk debt, levered loans, and that type of product than it might be in equities.
If your fund is loaded up on those,
I would be careful. Yeah.
Take a second look.
Absolutely.
All right. Michael Kantrowitz and Ron Sana, thanks for joining us today.
Thank you.
Good to be with you. And a news alert on Boeing. Reports of another software problem with that plagued 737 MAX. Boeing stock falling on the news and dragging down the Dow. CNBC.com reporter Leslie Joseph joins us now. Leslie, what do you find?
Well, we are finding out that Boeing has put in this piece of software. It's actually a software monitor. So when you start up an airplane, Boeing put this in to make sure that all the systems on the airplane, the flight control systems, et cetera, are working correctly. And in tests in recent weeks, we're finding that one of those monitors did not work. It wasn't able to perform that kind of check.
One of the software monitors, the software to monitor the software.
Exactly. And Boeing, of course, wants to put as many fail-safe measures in place at this point, and they're scrambling to get these planes back into service, so they need these things to work. Will it delay the planes? That's something that we do not know at this point, but they need everything to go well. Any sort of hiccup in that process, I mean, that's why we have the stock move that we just saw a few minutes ago.
I'm curious, when you have this conversation about Boeing and software in general, something like the MCAS system, which is built by United Technologies, I believe. When you talk about the software and software malfunctioning, is it Boeing writing the software that basically connects into that component, or is it the other way around?
I mean, they're putting in software so that they're putting in a program so that it can monitor and make sure that all of the other software programs, because these planes are highly automated, they do have very complex software, to make sure that all of those functions that a pilot sees, that a pilot is using, are working correctly. They don't want any of those things. They don't want the plane firing up, starting up, and then have those systems not work. So they put this additional step in there, which the FAA, they're working with now.
Forgive me if you said this and it went by me in one ear and out the other, but has Boeing commented on these latest reports?
Yeah, they said that they're working with the FAA on it, as they've said before, and again, reiterated that they do want to get these planes back into service and working closely with the regulator to do so.
And there is their statement on the MAX updates. Thank you so much for being with us.
Thank you.
Appreciate it very much. And for the latest on Boeing, you can find her work on CNBC.com.
New reports today saying the Trump administration wants to make changes to the Foreign Corrupt Practices Act. Larry Kudlow was asked about it. Eamon Javers is joining us now with the details. Eamon.
Yeah, Morgan, the new book is by two Washington Post reporters. It's called A Very Stable Genius. It's about President Trump and his time in office. And one of the anecdotes in the book relays an incident in which the president asked then Secretary of State Rex Tillerson to get rid of the Foreign Corrupt Practices Act. That's the law that prevents American companies from paying bribes overseas to foreign officials. The president has been critical of that law in the past publicly. And in the book, it quotes the president as saying, "It's just so unfair that American companies aren't allowed to pay bribes to get business overseas. We're going to change that." Well, Larry Kudlow was in the White House press briefing room today. He was asked about that and what the administration's view is on the Foreign Corrupt Practices Act. Here's what he said.
We are aware of it, and we are looking at it, and we've heard complaints from some of our companies. So I don't want to say anything definitive policy-wise, but we are looking at it.
So Larry Kudlow there saying he doesn't want to say anything definitive policy-wise about the administration's stance, but we are looking at it. That is, we are looking at the Foreign Corrupt Practices Act, presumably with a view to changing it in some way that would make it better for American companies or easier for American companies which are caught up in bribery situations overseas. I've asked aides to expand on Kudlow's comments here and explain what exactly the administration intends to do. You can't get rid of the law as the President of the United States. You have to get Congress to do that. But the Department of Justice enforces this, and presumably the Department of Justice under President Trump, if it wanted to, could take steps to change the way that law is enforced on American companies. No indication that's happening, though, just yet, guys.
Eamon, I mean, it's a sensational headline, right? The idea of getting rid of this or at least changing this act. But I wonder, especially given the fact that the administration does have such a focus on this idea of a level or leveling the playing field when it comes to things like being able to export manufactured goods, are there certain things that based on that act the U.S. is not allowed to do or negotiate that other countries are?
Sure. I mean, other countries are allowed, their companies do pay bribes and get away with it. And there is some market share loss for American companies. You hear American business people grumble privately about this, that it's an unfair playing field because their competitors can do this and they can't. And in a way, you can look at this and say it squares with the overall Trump administration deregulatory agenda, sort of taking some of the shackles off of American businesses so they can be more profitable. But this one is interesting interesting because the Foreign Corrupt Practices Act is just so totemic of America's position in the world as a force for law and order and anti-corruption, and has been used by the United States as sort of soft power around the world to lower corruption, and particularly for an administration that has said that its efforts in the Ukraine, which have led to the president's impeachment, were about cracking down on corruption. This is a tricky piece of messaging right now. So we'll see if the administration puts any meat on these bones and specifies what exactly they want to do here.
All right, Eamon, thank you very much. Eamon Javers reporting. Coming up, usually the cold weather months like December are quieter for home construction, but this December was red hot, sending home construction ETFs to an 18-year high. Can housing boost the overall economy? Plus, Comcast unveils its entry into the streaming wars. Can a free ad-supported service disrupt this crowded industry? We'll take a look at that when Power Lunch comes back.
Through the AT&T network.
Welcome to Nuffield Health Battersea, a gym built around you. You get regular health MOTs to create a plan that works for you, with physios and personal trainers on site. You'll find a wide range of equipment and classes, and our expert team will support you to get the most out of your health, fitness, and your membership. Join today to get the rest of the month free. Search Nuffield Health. Specialists in you. 12-month commitments only. Facilities stated are in most gyms. Visit nuffieldhealth.com/terms.
Hard Megxit or soft Megxit? Have Harry and Meghan misjudged public feeling? And what does their departure mean for the future of the monarchy? With questions mounting, turn to The Telegraph for answers. Subscribe today at telegraph.co.uk.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, small jobs, big jobs, work from home and your PJs jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30 gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Welcome back. A big jump in housing starts in December, up 16.9%. And that translating to the stock market. The home construction ETF hitting a more than 18-year high. The builder stocks like Lennar and Toll Brothers rising this week, as are the companies that the stuff that goes into the home. Mohawk Industries up 10% this week. Can strength in housing translate to the broader economy? Steve Leisman is joining us now with a rapid update on GDP. Steve?
Thank you, Morgan. Two of the major forces affecting the U.S. economy at play in today's data. The slowdown in manufacturing, in part from the trade war and global economic weakness, but the surge in housing linked to the decline in interest rates, and all of it, both sides, affected by the weather. Q4 now tracking 2.1%, and that's unchanged, and we'll explain why in a second. But Q1, the weakness is still in the forecast at 1.6%. Economists said they raised their forecast because of this blowout housing number, up 17%, helped by low rates and warmer weather in December. But they lowered them because of the weak industrial production report, showing some strains in manufacturing, but also lower utility out due to warmer weather. Amherst Pierpont, along with Action, up 2.4%. That's their fourth quarter estimate, tracking. Oxford and Natixis, of which we have a gentleman coming up shortly on this, at 2.2. B of A at 2, Goldman Sachs at 1.9, and Atlanta Fed bringing up the rear there, 1.8%. Good news, We started the quarter with rapid update at 1.5, so it's been trending the right way. But the 1.6 for this quarter, that could be a little more solid because the halting of production of the 737 MAX, as you know, Morgan, is going to shave maybe as much as a half a point off of GDP. And it's going to be tough to get that back, even from stronger housing numbers.
Yeah. Is there any way to sort of factor in what that's going to look like as we go into 2020 as well?
Well, that's for the fourth quarter that I'm talking. For the first quarter that I'm talking about, it's going to take about a half a point off, but it should come back as they bring the 737 MAX production back online. When that will be, I guess take the month that Boeing says and add 6 months because they've been off continuously. That's a joke.
How much? Larry Kudlow said that the trade deal will add at least a percentage point to GDP. You buy that?
I have not seen any estimates other than, or heard them from the administration. There's nobody in the private sector that's saying there's a percentage point. What the best I've heard,
pretty sure that's what he said.
I would not disagree with you that he said that, but what I've seen is that they've estimated that the trade war will take away 0.2% this year, and they've have that. 2020. They've have that, so maybe a 0.1 detraction. The trouble for the economists is they start from the standpoint of the tariffs being in place. You only got rid of 1/2 of one round of the tariffs that you put in place. So a lot of that negativity that comes from that and the disruption to the supply chains, they also do not foresee a big rebound in confidence that's going to be a big rebound in CapEx. If they're going to be wrong, Tyler, that's where they're going to be wrong.
But I think that and I want to bring in Joe Livornia here in just a minute. Why don't we just bring in Joe Livornia?
Thank you, Tyler.
Welcome.
He may have a better estimate.
Yeah, well, I would say you got your wallet on the table.
I know
here.
it's a big wallet. There's no money, and I got money in my pocket.
Anyhow, I think that what Kudlow was driving at was the volume of purchases that are implied or codified in this trade agreement, and it's several $100 billion when you throw in manufacturing, agriculture, and if the United States can generate that kind of supply, maybe it would add to GDP a lot.
The sentiment aspect that Steve alluded to, and Larry's very well aware of, is very important. The animal spirits are key, and it seems to me a couple of things have happened recently. Number one, the equity market, and as Larry likes to say, some of the growthier sectors like financials, industrials have done extraordinarily well. That is very good for corporate sentiment. That will help lift CapEx, and certainly housing looks good. Manufacturing, to me, Tyler, is close to a bottom. I've been saying that the last month or so. That will give us growth, and if sentiment improves, growth could be 3. I know that sounds aggressive. I think the street is way too pessimistic on the 2020 outlook. Way too pessimistic.
I'm curious, though, why you think manufacturing is hitting a bottom. Because, I mean, just today we had a number of industrials reporting earnings. Fastenal, CSX, Expeditors International.
Sure.
Didn't necessarily suggest, especially in Q4, that there was a bottom.
Can I add a footnote, Morgan? The freight and the rail data, speaking of economy and recession, it is so bad, that freight and rail data. It's terrible.
Well, look, the ISM says the sector is contracting. I'll give you 2 reasons why I think it's recovering. The less obvious one is the following. If you look within the internals of the ISM, when production runs below inventories, that means people have overcut. And that speaks to the natural recuperative power of the factory sector. In fact, that spread, which I alluded to as negative, has happened 4 other times in the last 40 years. And 2 of them were during the last recession. So I'm going to pick a bottom and say we're recovering. That's one answer. The other is if you look at all the different Philadelphia Fed surveys, which Steve is very familiar with, virtually all the 6 months components, 6 months forward activity components, have bottomed and have turned up. So to me, when the manufacturing sector recovers in 2020, CapEx, which is a big part of manufacturing, goes with it.
Joe, we don't disagree very much. I think it's a matter of timing and degree. I think what we have is an initial wave of weakness that we have to endure, in part because I think there's still bad stuff to work through the economy from the tariffs. I think they only took effect in September on a big and important chunk of them, and they're still out there on some $360 billion worth of Chinese imports. That's one. And then the second thing is I think we get some recovery in confidence. I think it's a back half story. You may do 3 and 2.
Can I talk about the tariff side? Because you raise a very good point. And look, to me, the tariffs because they're not all on final goods and services, the tariffs need to be measured in relation to the total size of the economy, which isn't 22 trillion in nominal GDP, it's 40 trillion. So 600 billion-ish on 40 trillion is just peanuts. It just, to me, doesn't matter, which is why I've argued from the get-go, the slowdown we had in the past was over-tightening of monetary policy. The Fed responded, they corrected their mistake, and voila, the outlook is better.
So let me close with two quick questions. Number one, Joe, is now a good time to buy stocks or not?
You're asking a fixed income guy that. There's no recession, so yes.
All right. Let's turn to Greg Ip's article yesterday in the Wall Street Journal, where basically his thesis was that the Federal Reserve and other central banks have lost their power to influence economies. I believe that's the head of it. The era of Fed power is over. Prepare for a more perilous road ahead. He made various arguments within it. Do you agree?
Look at the Fed's balance sheet in the equity market. Look at the housing market. No, I don't agree.
Because they're able to add to that,
sure,
even if they have limited ability to lower rates farther. Steve?
The two most powerful things that have happened to the stock market in the last several months has been the change in the Fed's balance sheet and interest rates and the extra December cut that caused the market to fall off. There is no evidence that the Fed has lost power. It looks more powerful than it ever was.
Steve and I agree.
Two thumbs up there, or two thumbs down on Ip's article, I guess is what you'd say. Joe, Steve, thanks a lot. Have a good long weekend.
Well, the Treasury Department will soon start selling 20-year bonds. Rick Santelli has more on that for us. Rick.
Yes, it's exciting. It's kind of back to the future, except for, Tesla's not DeLoreans. 1981 and 1986, we had 20-year bonds. Actually, I was in the 30-year bond pit when we had 20-year bonds. They actually got rid of the 30-year bond, too, in October of 2001. The decision wasn't easy, though. 20-year, 50-year, 100-year, all these ultra bonds, floating rate paper. Surveys showed, though, that investors at this point wanted something more traditional, like a 20-year. Those other maturities, by the way, are still under consideration. We'll learn more in the February refunding about when in the first half of 2020 it's coming. But the neat part is, why now? Well, primarily because the alarm clock has gone off on low rates. That's why we're doing this now. We're spending a lot of money. The tax cuts created money, but we still outspend them. But in the final analysis, that combination of low rates, trillion-dollar budget deficits, 20 trillion national debt, the Treasury Department wants to find the best blend of a portfolio that takes into account the sensitivities of interest rates and also the cost of servicing debt. Think mortgages. If you think rates are low now, and they are, would you take out a fixed mortgage or a floating mortgage or a long-term fix? I know you're smart. You pick long-term fix. Treasury's thinking the same thing. So it's definitely not going to be a floating instrument. It's going to be a fixed. And what exactly happens? Well, ultimately, the government's trying to control servicing the debt. It's already over $250 billion a year. Power lunch gang. Back to you.
All right, Rick, thank you very much. And coming up, a major media makeover. Fortune magazine getting a revamp. We will talk to the company's CEO about that big relaunch. And the CEO of Chime will join us. The fintech's founder will weigh in on the company's big money backing and its new deal with the NBA.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Heading for the net. Scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on. Never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Start hearing more of what you want.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations,
Live commercial-free news,
and every live NFL, MLB, NBA, and NHL game.
Visit TuneIn.com/premium to upgrade.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in. Touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Welcome back to Power Lunch. Industrials at records, but not all stocks are joining in on the surge. American Airlines, Boeing, FedEx, Rollins, 3M, Textron, and Snap-on, among those iced out of the rally in the past year. So are there any buys here? Well, let's bring in your Trading Nation team, Craig Johnson of Piper Sandler and Danielle Shea of Simpler Trading. Welcome to you both. Craig, I'll start with you. What are the charts saying?
Well, we're overweight the industrial sector, and I look at stocks inside of here. Take a look at the chart of 3M. If we look at this chart, you can see that the stock looks like it's making a bottom. From our perspective, we can see move back to the highs we've seen in 18 and 19. It's just about 22% upside from here, so we'd be a buyer of those shares here today.
Danielle, we've been hearing a lot about the reigniting of the reflation trade. Industrials certainly fit into that. What do the fundamentals tell us?
So looking at the industrials, they've been soft, and a lot of that has to do with the trade war. However, the space within the industrials that's been very strong is aerospace defense. For that reason, I look to Textron, and even though it's one of the laggards within the space, I prefer Lockheed, Northrop. I like that one in the long run due to the ongoing geopolitical tensions.
All right, Craig and Danielle, thank you for joining us. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation.
All right, ahead on Power Lunch, Peacock spreading its wings, or its tail, really, is what peacocks do. Comcast announcing more info on its streaming service. We will bring you the details, plus an extreme media makeover. Fortune relaunching with a whole new subscription model. How magazine publishers are fighting to stay relevant in this digital world. And FinTech on fire. A startup company called Chime has raised nearly $1 billion in funding, and it is spending a chunk of it to sponsor the Dallas Mavericks. The CEO will join us next when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
Overbought and oversold indicators are generally used differently depending on whether the stock is range-bound or trending. Look to buy a range-bound market when an oscillator, such as the RSI, falls into oversold territory and then moves back above it. Look to sell a range-bound market when the oscillator rises into overbought territory and then drops below it. I'm Lee Bohl, and Schwab is the better place for traders.
You know that tech stock we talked about?
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Puts his head down, crashes in the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. The Trump administration announcing it is sanctioning an Iranian brigadier general for human rights violations against protesters, saying it will hold the Iranian regime accountable.
He oversaw the massacre of 148 helpless Iranians in the Mashhad region last November. General Shahpour was in command of units responsible for the violent crackdown and lethal repression around Mashhad.
Here in this country, jury selection in Harvey Weinstein's sexual assault trial concluding after a difficult 2-week process, setting the stage for testimony to begin next week. 12 jurors and 3 alternates have been seated. Of the total, 8 are men, 7 are women. And President Trump welcoming Coach Ed Orgeron and the national champion LSU Tigers to the White House. They beat defending champion Clemson Monday night to take home the title. The president and the first lady also attended that game. And there's the star quarterback. That's the news update at this hour. Ty, back to you.
Ed Orgeron has the best voice in America.
Totally.
It's a growl. It is so great.
Which is so perfect for the Tigers, right?
It truly is, and for Louisiana as well.
True.
Sue, thank you very much. All right,
it.
time now for today's Power Movers. First up is Slack. It is dropping midday as Microsoft plans a big marketing push for its Teams. That's the rival to Slack. J.B. Hunt, the trucking company, missing earnings estimates by 14 cents a share. Citigroup's analysts calling the results weak across the board. And finally, Dave & Buster's ticker symbol PLAY. The private equity firm KKR disclosing a 10.7% stake in the company, leading some to speculate a takeover is possible, Morgan, at some point.
Yeah, look at those shares move. Shares are moving higher as well, hitting an all-time high after unveiling the Peacock streaming service. Peacock trying to stand out in a crowded field by offering 3 different pricing tiers, including a free version, which has less content and is supported by ads. For more on Wall Street's reaction to our parent company's offering, let's bring in Julia Borston. Julia.
Morgan, that's right. NBC Universal's Peacock is looking to be a new version of broadcast TV, but for the internet. NBC Universal forecasting that Peacock will have between 30 million and 35 million active accounts by 2024. Peacock is looking to differentiate from the crowded landscape for on-demand subscription services not just with its free ad-supported option, but also with early access to late-night shows, live Olympics coverage, and live breaking news, and exclusive access to Universal Films starting with the studio's 2020 slate. Now, analysts are largely bullish on Peacock's focus on growing demand for digital video ads and also offering an alternative to subscription overload. Wedbush analyst Dan Ives says, quote, "We believe, given the massive content library, sports properties, and distribution footprint, that those subscription numbers are conservative." Guggenheim with a buy rating saying, "We believe Comcast's strategy of offering premium content with an ad-supported model sets it apart from its peers." Now, Guggenheim does point out, though, that the product could have a negative impact on Comcast's linear video business. That's TV subscriptions. But of course, this is all part of the company's strategy to try to figure out how to tap into demand, not just from cord cutters, but also make sure that they're giving people reason to stick with the bundle. Guys, back over to you.
Julia, thank you very much. On the other side of the media landscape, another storied brand is getting a makeover for the digital age. Fortune magazine, more than a year after being sold by Meredith, is relaunching its new subscription tiers. Will offer 10 print issues a year and a library of digital content. And with us now is Fortune's CEO and president and our good and old friend, our young old friend, Alan Murray.
Thank you.
Good,
I
good,
think
good
we're
reunited
here,
yes,
right?
we're sort of reunited. Many years ago,
we did
hosted
a great
show
together. I don't know why isn't
Where
that
did
show
it go?
still on the air?
Where did it go? And of course, I grew up sort of in the magazine business, and Alan at the Wall Street Journal, among other places. My simple question is this. Yeah. Based on what you're doing, and we'll get into that in just a moment, are magazines as a standalone product dead? In other words, do they have to be surrounded by a lot of other digital video conference businesses?
Well, I don't think they're dead. We intend to be publishing Fortune as a magazine in addition to all the other things we're doing. We intend to be making money as a company. Look, but will
the magazine make money?
The magazine makes money now, but it's no secret that the magazine business has been in decline for the last decade, and it's becoming a smaller and smaller part of our business. Frankly, Tyler, you may not know this, but Fortune now 40% of our revenue comes from events. We do high-end executive events
around the world.
Around the world, 20 or 30 of them. That's actually now as much. We make as much revenue off of that as we do off the magazine.
So let's talk a little. Since you raised the question of the events business, which we're in as well, and so is everybody. Yeah. It seems. It's a high-traffic area, and I wonder about its sustainability for that reason, number one. Though Fortune has been in it a long time. Right. John Needham, a pioneer of it there, did a great job building that business. It is also highly sponsor-driven.
Not for us.
Not for you.
No. People pay people pay a lot to come to our conferences. Let me tell you why I think both our conferences and Fortune have a long future ahead of them. And by the way, this month is our 90th anniversary.
Amazing.
So we've been around for a while. But in a world where things are changing as fast as they are, this new wave of technology that has the potential to reinvent every business, top business leaders need peripheral vision more than ever before, and a lot of that comes in face-to-face meetings. It's from networking. It's from
they want to be together.
People. They want to be together. They pay a lot for that. Sponsors pay a lot to get access to them. So it is that is a thriving business for us, and we intend to build.
You should know that Morgan worked at a magazine.
I did. I worked at Forbes magazine.
I have heard of Forbes.
Yeah.
You know, but I'll tell you, it's a very interesting thing because Fortune and Forbes, even though people get them confused all the time, are headed in very different directions.
They are, which is my question for you. You just talked about that 40% of overall revenue being tied to the conference business, the live event business. But what does that revenue breakdown look like now that you're implementing these subscription tiers for digital?
Well, so we are getting more and more revenue from digital. More of it will come directly from customers. In effect, what we are doing is doubling down on our most devoted subscribers, conference attendees. We want to service them and help them deal with the rapid changes taking place in the economy. Forbes has taken a different direction, more of a mass direction, open up the platform. And I think they're very fundamentally different strategies.
So let's, what will Fortune look like, be like, feel like? You're going to 10 issues a year. You're going back to its historic use of art on the cover as opposed to people. There was a time when Fortune became a magazine where it turned business CEOs into celebrities.
So I don't know if
Marilyn Houston picture with F-35s behind her.
I don't know if the control room. There you go. Well done. I was going to see if the control room would listen to me and pull up
the magazines are going to be themed, right? They're going to be basically special issues.
So actually, this is Fortune's history. If you go back to February 1930, the first issue of Fortune, for 3 decades after that, covers were done by famous artists, and that's what we've done with this new issue, and that's what we're going to do more of. We want to create a premium book that you would be proud to leave on your coffee table for the month, and that has the kind of information that you'll want to go back to and peruse. So it's a really very different change in strategy from the shouting headlines that you put on the newsstand days.
What do you observe in the U.S. economy, the global economy right now? What's your take?
It's very interesting. You know, we did a survey at Fortune of investors, of high-end investors. We said, what do you see in 2020? 76% said they see a recession. 76%. But then we said, well, how about the market? 58% said they think the market will be up. So you explain that to me, Tyler.
Well, there are going to be lots of ways to consume Fortune's content, and continue. Good luck to you with that.
Great to see you again, Morgan. Great to be with you in spite of your past.
Yeah. Thanks very much. Good to be with you. All right.
Coming up, big tech versus small tech, and how the little guys are actually fighting back right now. That's coming up.
New York State, take the helm and ignite your spirit of adventure with a Sunsail holiday. Relax on a skippered yacht from sunny St. Lucia to the nutmeg-scented shores of Grenada, or take charge with a bareboat charter along Dubrovnik's glittering coastline. With up to 20% off selected destinations, now is the time to book your Sunsail adventure. Sunsail. See the world differently.
TalkTalk Business Superfast Fibre. Great value at just £21.95 a month. For butchers and bakers and selfie stick makers. With a 365-day UK contact centre. Rated great on Trustpilot by builders and brickies, accountants and techies. Average speeds of 67 megabits per second for party performers and takeaway corners. Fibre broadband for every business. Great value at just £21.95 a month for 24 months. Excluding 20% VAT with no connection fee. TalkTalkBusiness.co.uk. T's and C's apply.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Kansas.
Search NFL today.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
Welcome back. Google joining Apple and Microsoft in the $1 trillion market cap club. When you add Amazon and Facebook, those 5 stocks accounting for 19% of the value of the S&P 500. But that's not the only way big tech is dominating. Smaller rivals say they're abusing their size. Sonos suing Google for patent infringement, accusing Amazon too, but says it doesn't have the resources to fight both. Deirdre Bosa is joining us now from San Francisco for more on this story. Deirdre.
Hey, Morgan. Well, today the Antitrust Committee is hearing from several companies that have seen tech giants go from partners to fierce competitors. Sonos is arguing that beyond the lawsuit, the small number of now hugely dominant platform players are potentially squelching innovation, the kind that they say, quote, gave birth to Sonos. Now, lawmakers will also hear from Tile, the tracking device company. It says Apple is acting like a gatekeeper in ways that favor its own interests by, quote, owning and controlling the entire commercial iOS ecosystem. PopSocket's CEO is talking today about an Amazon partnership gone sour because of its inability to control counterfeits, an issue that has already caught Capitol Hill's attention. There's also Basecamp talking today, which sells an online project management tool. It's raising concerns about Google's search and ad practices. Now, Google, Apple, and Amazon have denied the claims, but the next critical question, guys, is whether lawmakers can actually follow through with regulations. As you say, this comes on a day when big tech is bigger than ever. Back to you.
Deirdre Bosa, thank you. Here's a taste of some of the other stories we're following today. A major C-suite shuffle in the world of retail. According to a memo obtained by CNBC, Walmart is shuffling its executive team after the 2019 holiday season, with Steve Bratsby set to depart. The retailer has yet to report its holiday sales, while rival Target earlier this week said that its 2019 season missed estimates. Shares of Walmart are down today on this news. You don't usually see these types of leadership shakeups, Tyler, before solid numbers, but we'll have to see.
Yeah, we'll have to see. And Walmart has had a very nice run recently under its CEO, McMillan. All right, Elon Musk is coming to Twitter's rescue in a Twitter conference hosted by Jack Dorsey, the Tesla CEO, called in. Elon from San Diego, first-time caller, sharing his advice on improving the platform. Musk recommended that Twitter would benefit from eliminating bots and fake users. Twitter's had a solid start to 2020, despite today's 1% dip. Mr. Musk must be a fan of Twitter.
Yeah, huge following. Not the first person to call for less bots and sort of, better guidelines for people that are engaging on there. But we'll see. We'll see if this one actually, Jack Dorsey takes it seriously. All right. Meantime, up next, the CEO of Chime. The company has been raising a lot of money lately and spending some of it on a new marketing deal. We'll get all the details next on Power Lunch.
If there was an official shoe of America,
Along the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
upgrade today.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Puts his head down, crashes, and the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown.
Search NFL to never miss a moment of the action. You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Welcome back to Power Lunch. Branchless digital bank Chime announcing a partnership today with the NBA's Dallas Mavericks. Tonight, the Mavs will begin wearing the Chime logo on their uniforms, a major investment for a 6.5-year-old Chime, which just raised $500 million, valuing the company at nearly $6 billion. Chime co-founder and CEO Chris Britt is in Dallas and joins us now. Chris, thanks for being with us.
Hey, Morgan. Hello from Dallas.
Hello. So I realize Chime has not disclosed what the cost of this partnership is, and actually I believe the NBA won't allow you to say, but presumably it's a significant investment. How will you measure the success?
Well, you know, we've had a tremendous amount of success over the last year expanding our marketing channels, and we've historically done a lot online, and in the last year we started doing more and more television. And we've found that some of the channels and networks that really work for us is sports programming. And so it's a natural fit for us to think about getting into the NBA and the Mavericks in particular. But this is, you know, not just about direct response advertising. It's part of our plan for 2020 is to raise the awareness of the brand, and we think this was a great opportunity for us to do it. It's not just on clicks and account openings, but also just brand awareness, which is a little bit of a new area for us.
Got it. How many customers do you have now, and how quickly is that growing?
I think we last announced about 6.5 million accounts that we've opened, and we're growing at a really rapid clip. Last year, we grew the business almost 4x.
What can I do on your bank? Everything I want to do? Get loans, have savings accounts, have cards, debit cards, credit cards, checking accounts, what?
Well, Chime's not actually a bank. We partner with FDIC insure institutions to actually hold the money. We're largely a consumer. Think of us as a consumer technology company, a fintech company that offers a range of banking services. We offer checking accounts in partnership, savings accounts, a Visa debit card, and we offer a bunch of service that people really enjoy. Like we don't charge monthly fees on the account. We give you your paycheck a couple days early if you sign up for payroll direct deposit. And the big hit recently is that we have a service called Spot Me that lets you take the account negative without charging you a $35
So let me understand this. You're basically a front end for banking partners. In other words, if I were to have my check deposited, would it go to Chime Bank or would it go to some bank that is affiliated with Chime and you're my entry point?
It would go to one of our FDIC insured banks. We've got two bank partners, Bancorp Bank and Stride Bank are the two partners that we work with today.
Got it.
Are you profitable?
No, but we could be. We are actively investing in growth and doing more and more on the marketing side. We could dial that back and become profitable. We have very attractive unit economics, which I think is why we've been able to attract a lot of attention from investors. But you know, we're certainly investing in new marketing channels, and the big one we want to talk about today is the Mavs. We couldn't, you know, I'm so fired up to be down here and announce this big partnership and celebrate. I think we're going to, you know, take the American Airlines Arena tonight, and I think Mark and Sint and the team are going to turn it green for us. So we're really excited.
Sounds like you're going to have a fun night. Okay, so you have this partnership with the Mavs and other ways that you're ramping up marketing. You're not profitable, but you could be. Valuation of $5.8 billion, millions of customers. Plans to go public?
We don't have plans to go public anytime soon. We're very well capitalized. So, you know, of course, there are a wide range of benefits from going public, including marketing and promotion and awareness. But for the short term, we're focused on efforts like partnering with the Mavs, which we just felt such a great connection with. You know, we're one of our core values here at Chime is to be member obsessed, and we really felt that same value throughout the entire enterprise of the Mavericks and how they think about their fans.
That's what I want to ask you. What's it like to work with Mark Cuban, and why did he pick you?
Oh, man, Mark's a force of nature. I've been able to spend a lot of time with him over the last few weeks and was over at the practice facility with him yesterday. He's just an incredible supporter. Obviously, wouldn't do a partnership with someone that he wasn't really excited about. And he loves our products and services and is eager to tell all of his fans about it. And so it's going to be an awesome partnership.
All right. Chris Britt, thanks for joining us.
Wait. I got to show you come on, let's check this out.
And by the way, let's look.
Luka Doncic will be looks like tonight. Luka Doncic, man, my favorite new player.
When Luka hits a three, he always goes like this, which is right where the Chime logo is. And I expect him to hit a few tonight. And also, just my last comment, I want to make sure Luka is just behind LeBron James for All-Star votes in the Western Conference. He's number 2.
Yep.
He's just a couple 100,000 behind. So if we could get all CNBC viewers today to get their votes in for Luka, we could get him up the list. We'd be really excited about that, too.
All right. Thanks very much. Appreciate it. Check Please is next. You can always watch or listen to us live.
Catch the Market Zone today and every week.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs. Small jobs, big jobs, work from home in your PJs jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Pascal gobbles up the rebound and slams it down. Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
On the goal line, scores and tucks it home.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
And a move, and a shot, and he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Smart Sports Wagering Talk is now on TuneIn. This is Brent Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Check, please. Remember the old movie Up, where the house got carried away by balloons? Well, that's what's happening with the markets. 1.7% higher this week for the Dow, 1.8 for the S&P, 2 for the NASDAQ, and the Russell 2000 will raise you 2.5% higher for the week.
Yeah, the transports, too, which hit a fresh 52-week high this week. A lot of earnings next week, even though it's a holiday-shortened week. We got 42 S&P companies, 6 Dow components, Netflix on Tuesday. It's going to be a big one to watch.
That will be very interesting. Stay with us because the next hour comes right up.
Thanks for watching Power Lunch.
Closing bell starts right now.
Welcome to Closing Bell. I'm Courtney Reagan on the floor of the New York Stock Exchange. I'm standing here at the Boeing Post. Shares are lower, down by more than 2%, retesting some of those lows on news of a new but different software program with the 737 MAX. We're going to talk about that coming up. The rest of the market, though, where is it? All-time highs. Where else would it be? We're going into a long weekend, and we've got 59 minutes left to trade.
Courtney, thank you. I'm Wilfred Frost. Good afternoon and welcome to the Closing Bell. Let's have a look at what's driving the action. The U.S. home building index surged to a 13-year high, signaling a strong recovery in the housing market. China's growth figures came in at a solid 6% GDP, firming up worries over a potential slowdown in that economy. And while we're on record close watch for the three major indices, billionaire hedge fund managers David Tepper and Stan Druckenmiller they're still buying equities. Joining us for the full first hour of the show, Lindsay Bell, Chief Investment Strategist at Ally Invest. Let's just quickly check on the markets. There you have it. Slight gains, but anything positive is enough for another record closing high for those indices. The S&P up 0.25% today, but up almost 2% for the week as a whole. It's been a strong first week of earnings. Let's focus in on the big stories we're watching today. SEMA is watching the market record highs. Diana Olick has details on strong housing data, and Steve Leisman is diving into GDP. SEMA, let's start with you.
Hey, Wilfred. Well, combing through the numbers, a number of sectors are quietly climbing to new highs. Dow Transports, the Renaissance IPO ETF, utilities once again, and the Russell 2000 is now less than 2% away. Strength in small caps widely seen as a sign of market breadth, given the very narrow leadership we've been seeing in the market over the past 12 months, dominated by Apple, Microsoft, and Alphabet, which together comprise 13% of the S&P 500. I also want to draw your attention to shares of railroad operator CSX into the close. A very choppy day of trade following mixed earnings, that 8% fall in fourth quarter revenue, which the company blamed on a softening industrial economy, and that stock is down right now. Courtney, back to you.
SEMA, thanks so much for that. Lindsay, in terms of this continual march high, does it get to a point where the valuations look too stretched?
I mean, right now we're almost at 19 times on a 12-month forward basis. So we're getting a little bit stretched, but you have to put that into context. And that context is that we have low interest rates and inflation that's stable and low as well, too. So you can be a little bit, have a little more of a premium in that type of environment. The 10-year historical average is about 15.6 times. So we're feeling a little stretched, but we'll feel better about it if we start to see those earnings numbers come in much better than expected.
Another part of the economy that is still going strong, it appears, U.S. home building surging to a 13-year high in December. Let's get over to Diana Olick. She's got more details. Hi, Diana.
Hi, Courtney. And the big builder stocks responded accordingly. The home construction ETF, that is ITB, hit a more than 18-year high earlier today, and that's after a pretty big run-up last year, all thanks to December housing starts. They surged nearly 17% for the month and were about 41% higher annually, the highest level since December 2006. Breaking out the two components, single-family housing starts were up 11% for the month to the highest level since June 2007. Multifamily apartment starts were up 32%. Regionally, starts were strongest in the Midwest and the South. Single family was weaker in the West and the Northeast. Back to you guys.
Diana, thanks so much for that. Some strong numbers. And speaking of those strong housing numbers, let's dive into how the numbers could impact GDP. Steve Leisman has that for us. Steve.
Well, thanks. Two of the major forces affecting the U.S. economy at play in the data today. The slowdown in manufacturing, partly from the trade war, global economic weakness, but the surge in housing linked to the decline in interest rates. And both actually were affected by the weather. Q4 now tracking 2.1%, with Q1, the forecast, no data yet, is forecast to rise 1.6%. That is the current quarter. Economists said they raised their forecast because of the blowout housing start number, helped by lower rates and warmer weather in December, but they lowered them because of the weak industrial production, which showed strains in manufacturing, but also lower utility output that was due to warmer weather. Amherst Action Economics, they're at 2.4%. Oxford Natixis 2.2%. B of A 2%. Atlanta Fed with the bottom there, 1.8%. The good news that we started the quarter with a rapid update at 1.5%, so it's been trending the right way up to above 2%. But the 1.6 for this quarter, unfortunately, looks more solid because remember, we have the halting of production of the 737 MAX. Some estimate, guys, are that could shave as much as a half a point off GDP this quarter before we get it back later in the year.
And Steve, I guess as well, the China GDP data should have some room for improvement. Now we've got phase one, and it also came in at 6%. So nothing that seemingly will bring down the momentum here in the U.S.
Yeah, magically at 6, we have to have an asterisk as to whether or not and how much we believe that number will have always when we talk about Chinese data. It has been weaker. It looks like maybe it's going to stabilize from here, and maybe the worst is past for both economies, the U.S. and China, when it comes to those tariffs. But some economists believe there's still some of the negatives of it to work through at the first half of the year, and to the extent they see a rebound from this recent agreement, they see it more in the back half of the year.
Steve, thanks so much for that. Now, it's not just bulls and bears today, but horses as well. This morning, our Joe Kernan received exclusive comments from billionaire investors David Tepper and Stanley Druckenmiller. Tepper wrote, I love riding a horse that's running. Druckenmiller followed up that commentary writing, so I'm still riding the horse and bullish immediate term. I have to say, I disagree. I don't actually like horses. They scare me.
I don't either. They scare me too.
But they are talking metaphorically, I believe, and we can draw what they mean from that. How long can the markets keep riding higher, essentially, is the question. Gabriela Santos, global market strategist at JP Morgan, joins us. Gabriela, to the point in the theme there, such momentum at the moment. Is there a point? How do you try and work out where the point is you have to step off the horse, as it were?
Yeah, I mean, the horse rode very, very fast last year. So great news for returns last year, but bad news in terms of the starting point for this year. So when we do look at PEs at 19 times, we think there's very limited room there for multiple expansion to support returns. They're going to be much more in line with earnings growth, which we think should end up between 3 to 5%. So what do? Doesn't mean we give up on equities altogether, but maybe we rebalance, right? We think more about a balance between value and growth, and we think a bit more about regional diversification, especially emerging markets. That's maybe where we can get a little bit higher return.
We just talked so much about how hot the tech sector has been, how much of the market is concentrated there. But when you strip away all of that and you look at it, that is where the growth is, though. So if you trim now, are you going to miss out on the sector that is the hottest? Because it should remain the hottest based on what they're turning out.
And very, very much agree that technology is a structural theme. It's not by any means last decade's theme, especially when you look at more the software technology names. So we wouldn't give up on tech. It's just rebalancing a little bit towards, shall we say, the beaten down and forgotten value sector, which a lot of our clients are extremely underweight at this point. And let's remember, value is also where you can get income, which is really important in this more limited capital appreciation market.
Lindsay, for all the focus on momentum being the driver, we're up, 2% or so this week. Is it not down to earnings? Have we not got a fundamental reason why we're higher this week?
Yeah, I mean, we're going to start to see that fundamental reason come through. For sure, the banks started and they kicked us off with earnings this week, and the numbers were pretty good, and that also is a reflection of the consumer and the strength of the consumer economy that we've had to endure over the last couple years here. So we're going to hear more next week. You have about 40 or so more companies reporting at the end of the month. We're really going to get into the heart of it. But the expectation is for earnings to decline just under 2%, 1.9%. That number's already moving up with the strength in the bank earnings, with growth in EPS for the banks above 11%. I think one area where you can see a surprise really is the tech sector. We're looking for a decline of 1.1%. That's a consensus estimate. And I think so far we've had only a handful of companies in the tech sector report, but the numbers have been really good, being on both the top and the bottom line. So I think that's where a surprise can come from.
And Gabriela, speaking of good numbers, we saw a number of these bank earnings report some strength in fixed income into that area. Should we be taking clues from what they've been able to in fixed income?
So it's interesting, right? We had in the fourth quarter finally a bit of a decrease in those very latent risks that we had throughout the year last year. So much better environment for investment decisions, for trading. So that certainly helped a lot of the big banks. In terms of fixed income specifically, we continue to think that yields are probably range bound, given where they've already fallen so far this year. Strong start to fixed income as well. So we think having a balance there between credit, things like high yield, local emerging market debt, as well as insurance, things like mortgage-backed securities and treasuries. So a bit of a balance, a barbell there in fixed income.
In terms of the overseas exposure, you're saying worth boosting. Where in particular? Not developed overseas, but emerging?
So I think, for a couple of years there, a strong case U.S. versus everybody else. This year, not so much, right? So bringing those underweights that so many of our clients have to international altogether, closer to a neutral makes sense. If we're talking about a little bit more enthusiasm, a little bit more overweight, for us it would be emerging Asia.
we've already started to see those earnings expectations drift higher, in line with this better stability in the numbers, including China and the rest of Asia.
Gabriela, thanks for joining us.
Thank you.
Great to see you as always. Up next here on Closing Bell, look at whether valuations are getting stretched. We'll dive into that as the market keeps rallying higher.
Plus, the 5 biggest American tech companies now have a combined market cap of more than $5 trillion. Coming up, RBC's Mark Mahaney tells us whether or not that's a worry point. And as we head to break, here's a check on our data tracker. Consumer sentiment coming in slightly better than expected reading for the month of January. Closing Bell, we'll be right back.
Do you have concerns about mild memory loss related to
whatever job you're searching for? You can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs. Small jobs, big jobs, work from home and your PJs jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
Cutting for the net, scores! Along the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
You can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Welcome back. Let's get a check on some individual market movers. We're going to start with Google parent Alphabet. The tech giant hitting $1 trillion in market cap yesterday. The stock today trading higher by just over 1%, about 1.4%. And transportation company J.B. Hunt trading lower after reporting an earnings miss and inline revenue this morning. The company citing cost increases for the miss. That stock is down just about 4.5%. Lindsay, we've been paying an awful lot of attention to things like the transports. They are weaker today by about 1/3%, but there have been days recently where they've been the outperformer. How are you thinking about the transports as we talk about J.B. Hunt?
Yeah, well, I know. I think that we want to see more of the transports earnings come out. We also saw CSX, which wasn't the top line guidance was a little bit weaker than expected. So I think we want to see how it plays out over the course of the earnings season and really not make any judgment just here and now.
Got it.
We've got just 46 minutes or so left of the session. Let's get over to Mike for today's market dashboard. Hi, Mike.
Hello, Wilf. Here's how we will finish up the week. First, pushing the envelope. This rally is really testing the limits of a typical uptrend. We'll take a couple of glimpses at that. And then regaining altitude. This is about one of the $3 trillion market cap companies and how it compares to a previous excess it had years ago. Under partial power, some traditional bellwether sectors of the economy sending some mixed signals right now, and then a gradual descent. That's a question right now because perhaps we're seeing a pullback in the surplus of available jobs. First of all, pushing the envelope, take a look at this rendering of the S&P 500 as it's made its way up this path higher. Now, this is basically these bands that are drawn around the index are called Bollinger Bands. They're basically a path that's sort of a 2.5% standard deviation from the median of the trend. Essentially, it means this is the trajectory that the market has had, and if you get to the top or the bottom of it, it is really testing some kind of a limit. What's significant here is right here. That was in the kind of the earlier part of, that's actually 2018, right? So that's January 2018. That was that point. We had this very exuberant rally. It did have a sharp pullback right after that. But I also want to highlight this time, that was in early 2017 when we did kind of bump up against this upper bound, and it didn't really cause much of anything except a flattening out of the market for a few months. So obviously you can go above this, but right here, just coming into the market today, we were basically running right into it. So that's something that I think a lot of folks who keep the tactics of the market in mind are watching. Now take a look at this. It shows you how broad the strength has been, which is a good aspect of this rally. It's the percentage of stocks in the S&P 500 above a 200-day average. Guess what? It also hit these extremes at those exact same moments in the recent past, and that was the January 2018. So once again, on a longer-term basis, this is a good trend. It means there's a kind of broad strength in the market, but it also means there's a little bit of a stretched aspect to this rally and perhaps some froth building up, guys.
And Mike, 200-day moving average is the key one, is it? Would it be even more pronounced over 50-day moving average?
Without a doubt, yeah. I mean, the percentage above the 50, I don't know if it's necessarily going to be the same 84%, but yeah, I mean, all these things are pretty much locking in right now into the same mode of saying, hey, look, this is usually where the market either takes a breather or it has a final lunge up and then has to consolidate a little bit.
Okay, Mike, thanks so much for that. Lindsay, the other kind of alternative view to this, I guess, is that things have been quite broad to start the year. I mean, clearly the big tech stocks have started well, but utilities are up strongly this week. You've also got real estate, you've got banks. It's not just been one set of companies only, and that's encouraging.
Yeah, the broadness is definitely encouraging. I think one of the things, too, that we have to remember that is driving this market up, really, it's not just all about trade. Central bank being accommodative across the globe really is also helping support these risky asset prices.
It does seem to me that, to your point, we feel as if we know what the Federal Reserve is going to do, or they're thinking right now, and we have at least a trade truce. So those two potential uncertainty points have been washed away and allows us to focus again on the fundamentals of earnings season, economic data points.
Yeah, it's going to come back down to the fundamentals. And I think it would be nice for the market to take a breather here. To Mike's point, valuations are getting stretched, or at least they're at high levels. Some of the data points he showed were really very interesting. And I think that we're probably going to see earnings that come in positive, but it would be nice for the stocks to just calmly accept that,
Well, we'll see. Calm. I don't know if we're good at that lately, but we've got about 42 minutes left to go before that closing bell sounds into this long weekend. The Dow is just marginally higher by about 14 points. The S&P 500 is higher by about 0.2%. Coming up next in Word on the Street, a tale of two social media stocks. Find out why UBS is upgrading Snap and downgrading Twitter.
And later, Morgan Stanley Investment Management's chief global strategist explains why he thinks global markets will outperform the U.S. for the next decade.
Rising energy costs are frustrating.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Down the middle of the 10, got to the 5, tumbles in, touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Welcome back to the closing bell. Time to get word on the street. Morgan Stanley out with a note on restaurant stocks, upgrading Yum Brands to overweight based on favorable risk-reward and discounting risks for Pizza Hut in the US. Morgan Stanley also downgrading Cheesecake Factory to underweight, saying despite being a legendary brand, the firm sees traffic weakness. Yum Brands is up 3% today, while Cake is down 3% off the back of those calls. Wells Fargo upgrading Pinterest to overweight, citing engagement gains, global monetization improvement, and an expanding international sales force. They're raising their target price on the stock to $30 a share from $28.
And UBS out with a pair of notes on social media stocks, downgrading Twitter to neutral, saying 2020 was supposed to be the year to capitalize on advertising revenue, but Twitter's focus on safety and security could pressure those margins. UBS also upgrading Snap to buy, saying the company can monetize its advertising momentum. Snap is up more than 4% today. You can see shares of Twitter are down just fractionally, about 0.2%. Lindsay, when you take a look at this social space, very different companies, Pinterest, Twitter, Snap, obviously the analyst communities were really digging into the fundamentals here and looking at them in different ways through different lenses. Do you like any of these names here?
Well, what I think is interesting is the call on Pinterest versus the call on Twitter. These are stocks that kind of look similar into the end of last year and into the beginning of this year, both rebounding. They had big drop-offs last year. But they're also, both things are being called out for the same issues, and that's spending. But Pinterest is spending on growth to grow the top line, while Twitter is spending on fixing their advertising issues and security, so therefore compressing margin and not getting the sales leverage that they need to create margin expansion. So I just think it's a kind of an interesting call here.
I've been so interested in Pinterest and the way that they have not really been able to tie in some of these retail partnerships in a super meaningful way, because it's so image driven and it seems like there's such a built-in audience there, and it just hasn't materialized in a big way.
No, I agree. I think there's a huge opportunity for Pinterest, and it's interesting that they're going after the international market. I know they have less monetization there right now, so there's a bigger opportunity, but I agree there's plenty of room for expansion domestically.
So to come here on Closing Bell, we've got your last chance trade, just 36 minutes left of the session.
Plus, Netflix will kick off earnings from the FANG stocks next week. And up next, find out what to expect when we speak to RBC's Mark Mahaney. As we head to break, here's a check on bonds and where the yields are mostly higher in today's trade. Again, going into a long weekend, the 10-year note is sitting at 1.83%. We'll be back after this.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Along the goal line, Martin scores! It tucks it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, and a shot, and he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league. NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, handoff to Jones, knifes it over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
Welcome back to Closing Bell. 33 minutes left of the session. There is the sector heat map for you today. Utilities and communication services at the top together. Not always that we see that, followed by technology at the bottom. Energy is the only really negative sector, with healthcare and industrials flirting with the flat line. The Dow's been flirting with the flat line itself in the last few minutes, but remains just positive. Anything positive for the three major averages will, of course, be a record close. S&P and NASDAQ each up about 0.1, 0.2%.
Well, here are the three things driving the action. The U.S. home building index surged to a 13-year high, signaling a strong recovery in the housing market. China's growth figures come in at a solid 6%, firming up worries over a slowdown in that economy. And while we're on record close watch, as Will mentioned, for the three major indices, billionaire hedge fund managers David Tepper and Stanley Druckenmiller say they're still long equities. It's now time for a CNBC News update with Sue Herrera. Hi, Sue.
Hello, Courtney. Hello, everybody. Here's what's happening at this hour. Canadian Prime Minister Justin Trudeau says his government will give $19,000 to families of each of the 57 citizens of Canada who perished in the downing of a Ukrainian jetliner in Iran last week. But he also said he still expects compensation from Iran.
This is immediate assistance for a range of needs that they might have. It is not the compensation that we expect will come and should come from Iran in due course, but these families need help now. And we will be getting this money to them as quickly as we possibly can in the coming days.
Jordanian protesters marched in Amman protesting the 15-year natural gas deal between Jordan and Israel. The deal has faced opposition in Jordan, where many view Israel as an erstwhile enemy. Back here at home, California-based Baby Trend is recalling its Tango mini strollers. Both of the hinges can collapse under pressure, posing a fall hazard to any child in the stroller. The strollers were sold on Amazon and in Target stores in October and November of last year. You were up to date. That's the news update this hour. Wilf, I'll send it back downtown to you.
Okay, Sue, thanks so much. We'll see you again a little bit later in the show. Let's get over to Mike, meantime, for the second installment of the Market Dashboard. Hey, Mike.
Hey, well, calling this one regaining altitude in valuation terms. We're talking about the $3 trillion market cap companies this week. Of course, Apple, Microsoft, and Alphabet. Microsoft is, to me, the most interesting comparison because historically, if you go back 20 years, just over 20 years, this was a $600 billion market cap company. It is now about $1.2 trillion, a little more than that. So it has doubled its market cap over this span of 20 years. Back then, however, it traded at about 60 times earnings. Right now, it's roughly 30 times earnings. So it is essentially double the market cap, 4 times the profitability today, and therefore 2 times the price earnings multiple. And you can see the premium to the overall market is also not what it was back then, but it is starting to get a little bit 30 times earnings for a super mega cap company arguably is pretty aggressive, but it's nothing when you compare it to the way things had been at that moment. It's really the only span of time that we can now point to and say this looks very kind of sober and sane and normal relative to that. But there's this class of stocks that have very, very firm profit margins and strong cash flows and excellent balance sheets, and the market just craves them. So that's where the $1 trillion comes from. It's nowhere near as nutty as $600 billion was in December of '99, even though that wasn't as catchy a figure.
That said, Mike, I wonder what the comparison of just simply top-line growth rates was then to now. Obviously, it's still healthy for a company of its size today, but back then it could have been quite a lot higher, no?
I was top line. I mean, I think it was around a 20% earnings grower in that period. So clearly rapid growth. But on the other hand, in the kind of tech downturn of 2001, 2, 3, it did suffer. Microsoft's fundamentals definitely did take a little bit of a hit along with everybody else right there, and there was a lot of premium to be bled out of the stock. But you're absolutely right. It's a much more mature company. Obviously now pays a dividend. Obviously now does a lot more things like buying back stock. So it's a different company right now. But just in case somebody wants to say that it's crazy to have a $1 trillion company, relative to the size of the overall market right now, it is really not out of bounds necessarily.
Mike, thank you very much. Lindsay, when you look at Microsoft, it seems like a more sane company for a lot of the reasons that Mike is laying down. But the growth is really something, I think, to marvel at, especially for the size, for the age. Do you think there's more room to run, or it's right where it needs to be for the numbers it's putting out?
Well, I think when you think about Microsoft, you think about the cloud, right? And they're really picking up speed against AWS and Amazon. So I think they have fundamental reasons for the stock to continue to grow and to continue to grow strength. And at that valuation, it doesn't look so crazy, like Mike said.
Got it. Well, Netflix is set to release its Q4 earnings after the bell next week. Speaking of hyperbolic company growth, the company is lower, though, by more than 6% in the last 6 months for its share price as Disney and Apple have launched their respective streaming services, Disney Plus and Apple TV Plus. So with the streaming field expected to get more crowded in 2020, can Netflix hold on to the top spot? For more, we're going to bring in Mark Mahaney from RBC Capital Markets. Thank you so much for being here with us today, Mark. As we look ahead to Netflix earnings, what are you looking for beyond, say, the subscriber number, which I know we focus on so clearly? Is it what's happening international where the opportunity might still be there?
Yeah, Courtney, I like the way you set it up. Look, this is going to be the first quarter in which we're going to see what happens to Netflix when the empire has struck back, when the mouse is out of the house, or whatever the analogy is. So this is the first quarter in which we're getting tested by Disney. And can Netflix, in this quarter, in the December quarter, and going forwards, maintain sub-growth relatively consistent with what it did in the year before? If it can, if it turns out that the market really wants to have 1, 2, 3 streaming services, paid streaming services, then Netflix's growth will be unabated and the stock will continue to rise. So they need to show that subscriber growth. That is, it still remains the number one metric on the company. They need to show that they can continue to expand margins by 200 to 300 bips each quarter. And then the last thing that's going to be really key, the people are going to want to hear them say that 2019 was the peak free cash flow burn year for Netflix, and that it has to come down. It was $3.5 billion last year. It should come down to $2 to $3 billion. People want to hear them commit to that. If they pull off those 3 things, the stock can move higher. If they don't, the stock goes back down.
Are we past the wobble mark that we got a couple of quarters ago in terms of sub numbers, not just internationally, but particularly in the US? Do you think they're on solid footing now and that will tick up at least, even if it doesn't soar?
Wilfred, I think so. I hope so, but we don't know. We certainly didn't expect to see them miss U.S. sub numbers 2 quarters in a row. That was last June and September. That was even before we had Disney in the market and Apple in the market. So I'm not sure. I don't think the coast is clear. Our survey work, which showed kind of an increase in churn indications beginning last year, beginning of 19, because of the price increase and because the company cut back on its marketing spend. So I think those were kind of behind the wobbles in the middle of last year. Maybe we're beyond that now, and maybe it really is that consumers are willing to sign up for multiple streaming services. I think there's just a big question mark over the company's ability to continue to grow subs the way it has in the past and continue to raise pricing. And I think of those two, the real question mark is, can Netflix raise pricing the way they have aggressively in the past? Given the slew of new competitors, you have to think they have less pricing power than they did in the past.
On the point of new competitors, let's talk about Peacock from Comcast, CMC's parent company. Do you think it's smart of Peacock not to go directly after the precise market that Netflix operates in and go for this free streaming with advertising?
Yeah, I think that seems like a very logical strategy. You know, there's going to be part of the market that's perfectly willing to pay, and there's obviously going to be part of the market that likes free, anything that's free. If it's ad-supported, we all have tolerated ads for decades, so why wouldn't you want to continue to do that on streaming? I think that absolutely makes sense that they offer, they offer multiple offerings to consumers. I was a little surprised that they priced their paid streaming service above the Netflix basic plan. If you're not undercutting Netflix with a paid streaming service on price and you're going to have much less content, it's very hard to see a lot of people signing up for that. So I think that's going to be kind of a donut coming out. But the ad-supported service, that could actually generate a lot of subs, and they will have good content on that over the years.
Lindsay, we talk an awful lot about these streaming services, and now we have information about Peacock just as of yesterday. When you look at the landscape of media, of streaming, of all of these names together, does one name stand in front for you, or do you think that we can have multiple success stories here at the same time in the streaming wars?
I think you can have multiple success stories. I think as consumers, we're willing to have a more than one place to consume content, but I think one that does stand out is really Disney, the Disney Plus app, especially for people with children, I think, and people that love the Star Wars franchise. It's going to be a no-brainer, right?
Mark, do you think the likes of Netflix ever offer advertising models at lower prices?
I don't think so, Wilfred. I've had countless conversations with Netflix management over the last decade, even longer, about the potential of offering an ad-supported service, and they have never indicated an interest in doing that. Anything could change in the future, but I think there's a couple of things here. One is that the value proposition of Netflix, kind of like HBO, is there's no ads. That's what people love about Netflix, or one of the things they love about it. So I don't think they want to screw up with the magic there. The second thing is the pitch has been from some investors, why don't you have an ad-supported service in markets where you can't generate a lot of subscription revenue? But in those markets, if you can't generate material subscription revenue in randomly Indonesia, you probably can't generate much ad revenue, so why bother chasing that? I don't think you'll see an ad-supported Netflix service. I don't think you'll see it in the future.
And just quickly, Mark, as well, on this new type of model that Peacock's gone for, we were discussing with Mark Randolph, one of the co-founders of Netflix, yesterday, and he raised the point that perhaps it's more of a threat to YouTube and Google than it is to the likes of Netflix. What do you think about that? Should Alphabet be a little bit worried looking over its shoulder with this announcement?
I don't think so. I think the core value proposition for YouTube is just different. I think it's I don't think it's lean back passive entertainment in a way that these other services are. I know there's a lot of high quality content on YouTube. I know they're trying to build out a subscription service. I don't think they're going to have much success doing that. I think the ad supported YouTube, that's become so much broader than that for most people. It's a how-to service. It's an educational tool for just about any industry or anything you want to learn. You go to YouTube and you'll find it. I think Peacock and YouTube, I think these are dramatically different directions. YouTube's safe. Don't worry, Google.
Okay, perfect. Mark, thank you. I'm sure they'll be listening.
Thank you, Wilfred.
Mark Mahaney from RBC. We've got 21 minutes left before the close. At the moment, we stand set for 3 record closes. Once again, albeit just 6 basis points higher on the Dow. Up next, we've got your last chance trade. Lindsay's looking at a payments company that could see double-digit earnings growth in the year ahead.
Plus, Morgan Stanley raising its price target on Apple. Why the firm says we're on the cusp of a smartphone market rebound. That's coming up on the Closing Bell.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Puts his head down, crashes, and
the snap is good. The hold is good. The kick is on its way. It is good!
Did you know all weekend long the NFL playoffs are on TuneIn?
In for the touchdown!
Search NFL to never miss a moment of the action.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
18 minutes left of the session. There is the closing bell big board. The major averages set for 3 record closes. The Dow's got to hold that 6 basis points of gains to have its own one. But S&P and NASDAQ look relatively safe with 18 minutes left. More than 100 stocks hitting all-time highs themselves today. Here's a look at some of those names. Comcast, our parent company, after the launch of Peacock, is in the list. Google, of course, crossed $1 trillion market cap at the close yesterday and extending that today. A couple of the other names there, including Nike, Microsoft, and Coca-Cola.
Many of the names we've talked about hitting all-time highs today. Well, it is now time for last chance trade, but we have about 18 minutes left to go here to act on Lindsay's advice. So, Lindsay, what is your last chance trade for today?
Well, given all the M&A news that came out in the payment space, I want to look at one of the original gangsters within the space, PayPal. They're positioned really to continue to benefit from the disruption that's happening in payments, the change to electronic and mobile, away from cash, also the blurring of lines between banks, payment centers, and also the social ecosystem in general. So these guys own Venmo, and I think a lot of people forget that, but they're only monetizing about 35% of that user base. So there's a huge opportunity right there. They're projected to have double-digit earnings growth this year, along with Visa and MasterCard as well. But this stock hasn't performed as well as those other two over the past year. So from a valuation perspective, we think there is more opportunity. Granted, I will admit it does trade at a premium. It's trading at 34 times on a forward PE basis, but it's 30 times historical average. It feels almost like it's a bottom for valuation in this stock right now.
You mentioned because of M&A in this sector, but are you suggesting PayPal's a takeover target, or that they're going to get involved in some M&A and find some nice companies to buy?
It would be the latter. My guess would be that they are the ones doing the acquiring.
Very interesting. I do think it's fascinating, the blurring of the lines between technology and banks, and how willing we've all been to just enter in our bank account information into these apps and allow for this seamless transition of money. It's fascinating stuff.
PayPal, the last chance trade call today from Lindsay. We've got 16 minutes left of the session. It's the last commercial we're going to take before we go into the market zone. Uninterrupted coverage of the final minutes of trade when we return.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Witch Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner. Slam dunk LeBron.
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Kansas.
Search NFL today.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
We've got about 13 minutes left in the trading day, and we're now in the closing bell market zone. This is commercial-free coverage of all the action going into the close.
CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. And today we've got Lindsay Bell from Ally Invest as well. We are higher just on all 3 major averages set for record closes with 12 minutes left of the session. Let's kick things off with Boeing dragging down the Dow on news of a 737 MAX software issue. Let's bring in Phil LeBeau, who, as ever, is covering the story for us. He joins us on the CNBC Newsline. Phil.
And, well, this is a software issue with 737 MAX that involves a specific piece of software within the flight control system. It's not for the entire flight control system when they're powering up a plane, but there was an issue they discovered while powering up this piece of software within the plane. They discovered it during an audit of the 737 MAX software that was done last week. Now, as you take a look at shares of Boeing, you can see that this news came out around 1 o'clock. That's when the shares dipped down. Down, about 7% today, 6% today. Not surprising since there's a lot of headline risk revolving around Boeing right now. The broader question for investors is, as Boeing works to fix this issue, will it push back a possible certification flight? That depends on how long it takes to resolve this issue and a couple of other steps that still need to be cleared. Or the return to service, will that be pushed back? At this point, most people involved with the process believe It's not going to be pushed back any further. The idea is still they think that they can get return to service sometime in the spring. But again, nobody's giving official deadlines or projections at this point.
Phil, just the fact that the word software comes up again in the discussion around getting this plane approval to fly brings back the idea that how often is that even part of the process of FAA approval? Surely this is something that should be able to be flied by a pilot legitimately and safely without any need for software whatsoever. And I just raise that again as to whether this plane really has a long-term future given all the challenges it's faced.
Well, all planes now have a ton of software within them, Will. So it is part of the process that the FAA does look at. And what you're looking at with this specific incident is they were shaking down the plane, essentially saying, okay, we've made a lot of fixes. What works, what doesn't work, what might need to be fixed. And that's what you want to find out. This is the time to find it out. And I know there's a lot of headline risk around the MAX, but at the same time, you have to look at this and say, okay, this is how you're supposed to find these things out when you do a software audit.
Phil, as always, thanks so much for joining us today on the Newsline. Down 2% for Boeing today.
But still sort of trading around this level that it just doesn't seem to breach even when you have these bad headlines. Well, Apple getting a pair of price target increases today from Morgan Stanley and Nomura. Morgan Stanley upping its target to $368 from $296, citing Apple's upcoming 5G product cycle. Meantime, Nomura is less bullish on Apple, that firm maintaining its neutral rating, saying it questions the enthusiasm for 5G. Nomura did raise its target on Apple to $280 from $225, though, citing strengthening iPhone demand. Shares of Apple are higher by almost 1% here. But, Mike, this just continues to rocket higher as the analysts put in their make their marks for their price targets ahead of earnings.
Up like 9% in January almost.
Exactly.
Amazing.
And the last 2 weeks this has been going on because we've highlighted a bunch of times that the street was caught a bit flat-footed on this run. So right now still, the aggregate consensus price target still trails where Apple is trading. And you almost can't blame analysts because for 6 or 7 years, the market simply refused to pay up for $1 of Apple earnings as much as they were willing to pay for the S&P 500. That all of a sudden changed. It blasted through the valuation range, and now they have to decide raise the price target or not. And really, it's interesting how it comes down to, is 5G a real thing, or is it just an excuse to buy the stock at these levels right now? And that's the debate on the street.
Well, why do you think that the market multiple has gone through such a clear marker? I mean, did people now think, it is a services company, it's not a consumer goods company?
I think it weathered this potential slowdown in iPhone sales. The upgrade cycle was absolutely better than anticipated, and there's been this sense that the overall upgrade cycle has been smoothed out, and therefore there's less suspense every couple of years. Are they going to be able to replenish and have demand for the devices? At the same time, services look like it's a very sticky revenue and profit stream and all the rest. And this is a market that's willing to generously pay up for all of these mega cap kind of disruptive companies.
Facebook, sorry, Lindsay.
I was just going to say, you have to wonder if it's priced to perfection going into earnings too. And this is an important one for earnings season because they represent 20% of the tech sector earnings. So it's going to be key to that sector.
Apple up about 8 or 9% so far in the start of 2020. Facebook, though, facing a lawsuit for alleged anti-competitive behavior. Julia Borson has the details. Hi, Julia.
Hi, Will. 4 mobile app developers allege that Facebook cut off their access to data on its platform in an effort to squash any competitive threat they could pose to the social giant. The lawsuit they filed asked a judge to order Mark Zuckerberg to give up control, calling Facebook, quote, one of the largest unlawful monopolies ever seen in the United States. Facebook has said that limiting developers' access to data protects its consumers, saying in a statement, quote, in the current environment where plaintiffs' attorneys see financial opportunities, claims like this are not unexpected, but they are without merit. This suit is just the latest critique of the company as it undergoes an antitrust review by the FTC. Wilf?
Julia, thanks so much for that. Mike, this particular story not really moving the share price a small increment to the general wave of anti-competitive potential action they may face in due course.
Right. It's certainly not on its own, and also was not seized on by the market as an excuse to start looking on the downside of Facebook, which, by the way, just recently nosed above its former all-time high, which was way back in 2018. So that was 217 a share. Now it's 220. So I do think it's at a little bit of a tricky spot right here in terms of trying to absorb further bad news. Let's see if it can.
And Lindsay, we talked earlier about social media stocks stocks. Facebook, I guess you could call it social media. You could call it a number of things. Put it in a media bucket purely or a tech bucket purely. Is there an overhang at all for some of these anti-competitive, antitrust worries? It doesn't appear that investors are so concerned with that.
I was going to say, if you look at the momentum behind this stock, it really doesn't seem like investors care about the regulatory risks that lie within this stock. They're still generating ad revenue hand over fist, so I think that's what investors really care about.
We just have about 5 minutes left to go before the closing bell sounds. We're going to dive into some of the healthcare stocks that are sitting out the rally. Eric Chemi has some of those for us. Hi, Eric.
Hey, Courtney, that's right. The healthcare sector as a whole has soared 18% over the past year, notching new all-time highs in today's trading. But it's not been an easy ride for every name in the group. Some of the big healthcare laggards include companies like Abiomed and Mylan. Both stocks are firmly in bear market territory. Over the past year, they're down 45 and 26%. Respectively. We also have biotech giant Biogen, that's down 16%. So as we see the broader healthcare sector setting new highs, let's not forget some of these big names that could have much more upside potential if they can turn around.
Thank you very much, Eric. So, Lindsay, when you look at this healthcare trade, do you think that there is a potential for a catch-up? We were talking about earlier in the show whether it's time to trim some of your winners and plow some money into some of the names that have been left behind. Anything attractive to you in this space?
I was actually surprised in the run that it had in towards the end of the year, especially going into this is an election year. Healthcare, this is not the year that healthcare is supposed to do well. So anytime healthcare starts to pick up, it always perks up my ears because to me that's a defensive play, and it seems to say that investors are getting a little nervous.
Mike, in terms of the sector performance today, healthcare is not taking part, but some of the other defensive names like real estate and utilities are. There's quite an odd sector construct today.
There is today, and even this week in general, it seems just as if, finding a bit, although technology has been, right there as well. It's mostly due to Apple today. So, yeah, I don't think the fact that bond yields have remained so contained, even though they're nudging up a little bit, probably explains a little bit of that rotation. Bond fund inflows were massive the last 2 weeks. So you have to imagine the same instinct that has people buying bonds at this level has them buying utilities and real estate stocks too.
Should mention with 3.5 minutes left, we're at session highs. S&P 500 is up about 0.4%. The Dow does still lag because of Boeing's effect on it from that intraday slide, but the S&P's up 0.4%. Meantime, Schlumberger releasing earnings this morning. Sue Herrera has the results for us. Hi, Sue.
Hello, Wilf. Hello, everybody. Here's what's happening with Schlumberger. It delivered earnings and profits that topped analyst expectations, and that initially sent the stock higher today. But it was the big North American warning that caught the headlines. The company said that while its international revenue grew by 7%, its revenue in North America plunged 10% year over year. Given that weakness, the company says it will restructure its business in the U.S., including a 50% reduction in its fracking fleet here. On the other hand, Schlumberger sees more room to grow internationally, and it will continue its investments overseas. So more of a global emphasis than a U.S. emphasis. Court, back to you.
Thank you very much. So, yeah, shares of Schlumberger down more than 1% at this point. Mike, as we head into the close with a couple minutes left, what's going on under the surface in the market here?
It's net positive. If you look at New York Stock Exchange breadth, it hasn't really been a dramatic story, but we're seeing a little bit of a spurt in the overall index heading into the close. So advances versus decliners is modestly positive. Look at the sector, some of the sector breakdown for the week. As Wolf was just saying, utilities, real estate outperforming things like consumer discretionary and financial. So that does show a little bit of rotational action. Then the volatility index, keep pointing to it. 12 looks like kind of a floor, but we're very close to it right now going into a 3-day weekend.
S&P's at session highs with just under 2 minutes left. Let's check in on bonds. Rickster.
It has been a wild week in terms of interest rates, and the Treasury is going to add a new guy. 20-year bond's going to reappear after being gone since 1986. Look at a 2-day of 2-year. You can see we're down on the day, down on the week. But as you move down the curve, the numbers improve. 10-year note yields, you could see the pattern on the 2-day, surging on better data this morning, although job openings and labor turnover, the openings was at a 21-month low. Everything else was golden. Finally, a 2-day, the dollar index managed to surge to close up on the week. And when you look at the NASDAQ, all I can think of is surging on the close to new all-time highs, momentum times 5.
Yeah, the big mo for the NASDAQ overall. The interesting thing is that this week it's the small caps that have actually outperformed. They're breaking a 3-week losing streak, and you're seeing new highs there in a wide variety, whether it's Redfin in real estate, 47 in health tech. But of course, the mega caps are the big draw and are the big dogs that move things, with Alphabet joining the aristocrats in the $1 trillion range. The former aristocrat, Amazon, was the big drag this week. Alphabet, another all-time high today. Microsoft was actually the biggest addition. And chips will be in focus next week. Qualcomm closing out here at an all-time high close. And Texas Instruments will be reporting next week. Seema.
Signs of stabilization in China's economy, enough to send a number of global markets to new highs. Japan at a 15-month high, South Korea at a 15-month high. And for emerging markets, UBS makes a point that growth has to succeed 2.5% for emerging economies and their stocks there to outperform. Here at the close, the Dow Jones Industrial up 44 points off the highs of the day. Back to you.
If you're just joining us, welcome to the Closing Bell. I'm Wilfred Frost.
And I'm Courtney Reagan in for Sarah Eisen, along with Mike Santoli, CNBC Senior Markets Commentator.
Let's check in on where we closed. 3 record closes. Once again, the S&P 500 closing right at a session high as well, up 0.4%. NASDAQ similarly near a session high, up about 1/3%. The Dow, because of Boeing's intraday pressure on the index, not at a session high, but still in positive territory, up 0.16%, and another record close for them. Communication services, tech and utilities led the charge today. Industrials and energy in the red.
Joining us to talk about the market day is Sylvia Jablonski. She's Managing Director at Direxion. And still with us is Lindsay Bell, Ally Invest Chief Investment Strategist. Mike, first comment to you. Going into a long weekend, I feel like normally we feel a little bit more bearish than the action showed today, even if only just marginally positive, but in all record closes.
Sure. No, you wouldn't have blamed the market for actually taking a break today and stalling out and essentially taking a breather after this run. But the same kind of cocktail remains pretty much in front of the market right now. You got some reassurance this week about the prevailing consensus that retail sales look fine, the consumer is good, housing can lead, and tech, remains sort of well bid just because people are just binging on secular growth stories. Beyond that, though, I just think that you have to recognize that this rally has come to a point where if it continues higher from here, you're really going to be in overshoot mode if it tacks on a lot of upside from this moment, just given how stretched it's become.
We're going to have everyone hold on just a second. We do have a news alert on Best Buy. Eric Chemi has the details for us. Hi, Eric.
Hey, Courtney, that's right. According to Dow Jones, Best Buy's board has opened a probe into the CEO's personal conduct. It's investigating allegations raised in an anonymous letter to the board. Best Buy CEO says the board has her full cooperation and support with this review. The letter alleges that the CEO had a relationship with a former senior vice president who left the company in March of 2019, an inappropriate romantic relationship with a fellow executive. Best Buy's board has hired outside counsel to conduct the investigation, and the company says it takes the allegations of misconduct very seriously. CNBC has reached out to Best Buy. We'll let you know if we hear more. Courtney, back to you.
Thank you for that, Eric. Shares of Best Buy are lower by about 1 1/3% after hours. We can get back to the market. Sylvia, we were talking a bit about the market stretch, valuations. Do you feel like we've run too far, or do you not really have any reason to panic because the fundamentals still look relatively strong economically, financially, when you look at earnings season? Where are you right now with sentiment and the market's run?
Yeah, sure. Well, we heard from, 2 of the most famous billionaires today about wild horses running on and jumping on horses to gain momentum. I think that, December looked pretty good, and we're starting off the year in a similar spirit. So last year was about trade tariffs, and then this year started out with potential trade, or a potential war with Iran, and both of those issues got resolved. So some of the positive things came back to light, which is a supportive Fed, supportive central banks globally, all-time best multi-decade jobs numbers, consumer spending, and I think a lot of the sectors have essentially done extremely well and continue to pay off for investors who are in the market.
Just want to pivot back a little bit to the Best Buy news and just check in on what that's doing after hours. Of course, the stock had a great run, a pivot from having been incredibly cheap and then seeing some turnaround executed that gave the stock a big recovery last year. Some support, obviously, in the work that CEO Cory Barry was doing. Mike, therefore, if there's the question mark over the CEO's future, the stock's giving up a bit of those gains that it's seen of late.
I think as a reflex move, this is the understandable direction without knowing much of anything beyond that, simply because I think you had street buy-in on the strategy and people thought that they had things figured out. Probably a pretty good fourth quarter finish up to the year as well is the expectation. So to me, it makes sense, although you don't know necessarily if the fortunes of the company are entirely hinging on what happens with this investigation.
Yeah, I was going to say, Mike, I mean, since you're our trend guy and you have such a library of knowledge, when we get these allegations that come out for a company, this feels like a typical reaction to you, but we may not hold here. Is that what you're saying when you sort of extrapolate what we've seen in the past with other executives?
Yeah, I would say that this is just sort of a, back away a little bit and let some smoke clear. I don't know necessarily that, obviously far worse than this would more likely be that there was some kind of malfeasance on the financial side of things or something that actually had to do with the operations of the company. We've seen these situations recently where there was just an on-paper policy against, romantic relationships. Some executives have had to leave, but it didn't necessarily change the course of the company.
And Courtney, stepping back from today's particular piece of news, I mean, Best Buy has started to execute quite an impressive pivot in a sort of way that Target had as well, and being ready for the new digital age.
They absolutely have. I mean, if you look at this company, I believe it was around 2012, if I'm getting my dates right, when Hubert Joly stepped in, and many people thought Best Buy may not be around in several years. He even acknowledged as much. They really cut out a lot of the fat of the company, turned it around from on the brink of sort of failure to really a success story. And Corey Barry, now the CEO, was largely a part of defining that strategy, both, as CFO and then now eventually CEO. And so the street, to Mike's point, has really bought into her as a leader at the company, believe in her, believe in the direction as it's proven to be the right one so far for many investors.
We will keep an eye on the Best Buy share price move in after-hours trade, slipping a little bit of percent or two as the board of Best Buy opens a probe into CEO Corey Barry's personal contact. Moving on, though, two legendary hedge fund managers sounding a bullish note on the markets to CNBC earlier today. Appaloosa Management co-founder David Tepper telling CNBC that he loves riding a horse that's running, and that he has been long the market and will continue that way. Meantime, fellow hedge fund manager Stanley Druckenmiller parroting the rodeo theme, also saying he is, quote, still riding the horse and is bullish immediate term. Mike, we haven't asked you if you like horses.
I don't mind horses. I don't have any kind of irrational fears of vegetarian mammals who don't want to hurt us.
No, but they're powerful and unpredictable.
They are, without a doubt.
Which is, I think,
which is why they have to be respected when they're running, and if you get to basically use them to get somewhere, they're useful.
Unless you're well-trained. And I guess cowboys don't herd cows. They herd cows. Let's ignore that. Sure. Anyway, they can stop all of a sudden, though, for unexplained reasons.
They can stop and become unpredictable. And look, I do think that neither David Tepper nor Stanley Druckenmiller have gotten to where they are by fighting the tape. And this is a typical don't fight the tape move. The market has wanted to go higher. If you've already been long, there's no reason to panic out. The longer-term trends seem like they're pretty well intact, even if everyone's getting a little bit nervous about how easy it has seemed for a little while. So I think this is in tune with what we've been hearing from the market. And David Tepper, I mentioned earlier as well, is a credit guy at root. That's where he started out in high yield and things. If you're looking at credit indicators, you don't really have too many reasons to worry at this point, unless you feel like it's just simply too good to last. But the market will tell you that if we change.
Lindsay, I know earlier you were saying you would be okay if we saw a little bit of a pullback here, and we all look at history to help us try to predict the future. But we haven't been in a stretch like this for a long time. So it may not necessarily be ending. I mean, good news can be good news, can it not?
Yes, it can. I also, though, think, to your point, Mike, I also think these two gentlemen, they don't fight the Fed either. And I think that was a big thesis behind getting more involved at the end of last year. I think it was David Tepper said that. So the easy money policies that we're currently living with, not only domestically but around the globe, are certainly helping to fuel the fire that we're seeing in the market. But ultimately, I think fundamentals are going to have to prevail at these valuations.
Sylvia, some closing thoughts. What's your top sector pick for the year ahead?
Yeah, so, I'll throw in my triple crowns, and I think that they're in the field of, or in the sectors of technology, semiconductors, and the consumer. The consumer spending, we continue to see these new names hitting the Trillionaires Club, China deal, semiconductors, 5G, all of that is poised for really good things in tech, semiconductors, and the consumer will buy it.
Sylvia, thank you for that. Lindsay, thank you as well for joining us. Great to see you both.
Thank you.
Well, up next, find out why Morgan Stanley's investigated for a romantic relationship. Excuse me, let's start this again. Let's find out. When we're coming up, we're going to talk about Best Buy CEO who is being currently investigated for a romantic relationship with another exec. We'll continue to follow that story. And then up next, find out why Morgan Stanley's investment management's chief global strategist sees storm clouds on the horizon for the titans of tech. Closing Bell's back in 90 seconds.
Sometimes the...
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
Keys. Check. Phone. Check. 70s playlist downloaded. Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
Welcome back to Closing Bell. Check out shares of Best Buy, which are down after hours here, just about 0.6% on word that Best Buy's board has opened a probe into the CEO's personal conduct on a report or a letter that there may have been some inappropriate behavior between Corey Barry, CEO, and a former executive at the company. We'll continue to follow this story as Closing Bell wears on here.
Now, in the past 10 years, the S&P has risen nearly 200%, while emerging markets and China saw meager gains. But our next guest says that if history is any guide, the 2020s will be anything but another decade of American dominance. Rashid Sharma is Morgan Stanley Investment Management Chief Global Strategist and Head of Emerging Markets. He joins us now. Rashid, good to see you. Thanks for joining us.
Good to be back. Thanks.
Let's talk about some of these big predictions you've laid out for the decade ahead. One of which is that we've had this huge decade of US outperformance and that the decade ahead won't be the same, or at least not to the same relative sense.
Yeah, that's been the history of the last 100 years, if you look at it, which is that every decade for the last 100 years, there's been one theme that has dominated the investment landscape. That theme has typically risen by about 5 to 10 times in relative terms compared to other asset classes and even in absolute terms. The past decade was all about US and the dominance of tech. The FANGs were the new BRICS, as I put it, in terms of a decade ago, everybody was obsessed with the BRICS, Brazil, Russia, India, China. That was the acronym on everyone's minds. That got replaced by FANGs. And my point is that now, as we turn the decade, this very hot investment theme is likely to falter. That's been the history lesson of the last 100 years.
In terms of specifically those tech names, is that because there'll be some other relative winners, or that these companies are just stretched valuation-wise, or stretched because strategically they have some issues?
Right, I think all three. So if you look at the top 10 lists, or in terms of what the largest companies have been at the start of each decade, what you will find is that in every decade, 9 out of those 10 companies typically change. So if you look at the list at the beginning of 2010, the names on that list, half the names were commodity companies. Microsoft was the only company which is common to what you have in the top 10 list today. All these companies, we tend to forget this, that many of these companies on the top 10 list today, including Facebook, Alphabet, all these companies, Amazon, they were nowhere near the top 10 at the beginning of the decade. So that churns every single decade is my point. And there's some fundamental reason for that. Tech has been able to grow so much over the last decade because it has been the least regulated sector compared to manufacturing, compared to financials. The number of regulation that the tech sector has faced has been a fraction of those other sectors. Now you have a period where these other sectors from manufacturing to financials are facing some deregulation. And I think that the regulatory risk for big tech is rising as each month goes by. So that could be another fundamental reason for the churn. And plus you have obsolescence. The last time tech dominated the top 10 lists in such a way was 1999. But apart from Microsoft again, the tech companies which dominated the list, 7 of the 10 largest companies in the world in 99 were also tech companies. Today also we have a situation where 7 of the 10 largest companies in the world are tech companies, except 6 are new companies, and only Microsoft is a survivor among those top 10.
A survivor and a thriver, to be sure. Another one of your themes is moral capitalism, and this seems to make a lot of sense with me, especially as we're in an election year here, 2020. We also had Larry Fink come out and talk about ESG investing. So you think this is going to be a sustainable theme through potentially the next year, the next 10 years and beyond?
Yeah, I can see the momentum of this building. Already flows are surging into this sort of category. We are seeing more and more pension funds, particularly in places like Europe, demand much strict standards on this front. And this goes back to my decadal themes. The 1990s, we saw an incredible growth of mutual funds. The 2000s were all about hedge funds. The last decade has all been dominated by by inflows into private equity and private assets, so to speak. I think that in the coming decade, given the sort of rise of moral capitalism, as I put it, I think that a lot of these ESG social impact funds, those are the ones which could be the hot investment vehicle of this decade.
Ruchir, thanks for joining us. Great to see you as always.
Great to be back. Thanks.
Well, coming up next on The Closing Bell, we'll dive into the story that just broke in the last few minutes. The CEO of Best Buy, Corey Berry, being investigated for a romantic relationship with a fellow executive. Management expert Jeff Sonnenfeld will join us next to talk it through.
And later, the Forgotten 40. Find out which unloved stocks could be set to outperform in the year ahead. And a reminder, you can always watch us live on the go on the CNBC app. Closing Bell, back in a couple minutes.
Take the helm and ignite your spirit of adventure with a Sunsail holiday. Relax on a skippered yacht from sunny St. Lucia to the nutmeg-scented shores of Grenada. Or take charge with a bareboat charter along Dubrovnik's glittering coastline. With up to 20% off selected destinations, now is the time to book your Sunsail adventure. Sunsail. See the world differently.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Pascal gobbles up the rebound and slams it down.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back. Best Buy shares under pressure after news broke that the company is opening a probe into CEO Corey Berry's personal conduct after an anonymous letter to the board accused her of having a relationship with a former senior vice president. It's not the first time Best Buy has dealt with this kind of issue. Former CEO Brian Dunn resigned in 2012 after an internal investigation determined he had an inappropriate relationship with a former coworker. For more on this developing story, we are joined on the phone by Yale School of Management's Jeff Sonnenfeld. Jeff, thank you so much for being here with us. So right away, we did see shares of Best Buy take a dip lower. They recovered somewhat, but still down about 1% after hours. We talked about how Corey Berry has been a key architect of Best Buy's strategy that has worked for investors for some time, which I imagine is the reason why the stock is lower. Is that your take on this as well?
Yeah, I think that's right. I mean, hopefully these allegations are false and malicious rumors, gossip, or some vendettas. But of course, with the boards taking it seriously enough to have an objective third-party outside investigation, as you probably know, the fantastic law firm of Sidley Austin is taking this on. So this really will be a pretty thorough, independent review. You saw that. The situation's a little bit different than the Brian Dunn. Not only are the genders reversed, but in that case, there was a question of abuse of power situation where Brian Dunn, age 51, was running around with a 29-year-old who was a first-line employee with a desk outside his office. That was an odd situation. There are questions about resources of the company. In this case, there are two peers who worked together for 20 years side by side, but they still, many companies have a fraternization policy that if it's good for anti-fraternization for employees cascading down the line, then it should be held at the top, enforced.
But Jeff, I mean, there might not be an extreme difference of power here, but if you're the CEO, then there is at least some difference. I don't know how senior exactly the person was who supposedly, according to the reporting, that Corey Berry engaged in a relationship with. But if you're the CEO, then you're already playing with fire when it comes to the power structure.
No, that would be the case. But what we understand here is similar to maybe what we saw at Intel last year, which was unfortunate, where it was a past relationship. Here, they're pretty close to peers. At the time, this is a senior vice president, I believe his name is Carl Sanford, that are the allegations, and she was the CFO at the time. That this is not alleged to take place after she was CEO, which the transfer of power, of course, was just this summer. It's really a shame. In addition to for the individuals involved in the company, it's just in terms of the history of this company. They'd done such a great job of proving all the cynics wrong that they could take on Amazon. And with Mr. Jolly, Hubert Jolly, just did such a great job with a 40% stock pop just in this past year. But they had plummeting sales, plummeting stock price. Employees were so and customers were so demoralized. Here with this fantastic turnaround coming in after the last scandal, and now we see it punctuated or bookended possibly by this scandal.
Jeff, what do you teach your students today at Yale School of Management as they're preparing for a career ahead in corporate management positions when it comes to relationships at the workplace? Is the teaching now absolutely none whatsoever?
Yeah, I know it does sound prudish, and we've been chided in the international press when Jack Welch had his, of course, dalliances, which was not exactly on the job, but it still was confusing and dealing with an editor of the Harvard Business Review and things like that. To try to keep your personal life separate from your work life, and that's a problem. Some would argue you can't regulate romance, that you really meet people so much at airports and bars and parties anymore as a grown-up, and in fact, working working side by side in tense relationships as peers in professional service firms or in a retailer like this. Many times emotions get mislabeled as love or affection, but nonetheless, you really have to draw the boundaries because it does confuse the objectivity of decision making. There, you can't have. We had this issue. I guess it became a major issue in around 1983-84 with Bill Agee and Mary Cunningham at Bendix, where there was a lot of discussion about sexual favoritism. Favoritism had always been a problem with golfing buddies or hunting buddies, but when we started to have two genders working side by side in close proximity in tense environments, the sexual twist on it added a good deal of concern and salience and in emotional issues as well as issues about justice. And the abuse of others, how it's seen. Do they have to comply with something like this to move ahead in the firm?
I suppose one lesson could be if you were a company to just have pretty clear rules, whatever you decide that those are, so that if there are allegations, it may be easier to determine if there was misconduct or not. When the rules are gray, this may be more difficult for a company. But Jeff, thank you so much for calling us.
Oh, sure. And there's some industries especially susceptible, but thank you.
Yes, thank you very much. We will continue to follow this story throughout the hour and in the days to come.
Still to come here on the show, we'll discuss the future of ESG investing and whether companies are really being as socially responsible as they claim to be. We're back in a couple minutes.
Nothing comes easily.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes it over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Smart sports wagering talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Welcome back. Time for a CNBC News update. Sue Herrera's got it for us. Hi, Sue.
I do indeed, Will. Thank you. Here's what's happening at this hour, everyone. Authorities say one person has died and one person is seriously injured after an avalanche at a Northern California ski resort. The avalanche occurred in the Squaw Valley area of Lake Tahoe. A winter storm dropped 25 inches of snow on that area on Thursday. The Supreme Court will decide whether Electoral College voters are required to support the presidential candidate who wins a state. If not, it could upend an election. The case will be argued in April with a decision by late June as the 2020 presidential campaigns heat up. The CDC announcing they will begin screening airline passengers from central China for a new virus that is making people sick. It's part of an effort to better detect and prevent a newly identified virus that emerged in China last month. And federal agents arrested 3 alleged members of the racially motivated violent extremist group, The Base. The three were charged with firearms and alien-related charges. They were believed to be planning to attend the pro-gun rally planned for Monday in Richmond, Virginia. You're up to date, guys. That's the news update this hour. I'll send it back downtown to you guys.
Thank you very much, Sue. Well, it's been a big week for ESG investing, with multiple high-profile companies pushing the idea that corporations should value more than just profits.
BlackRock's Larry Fink announced on Tuesday that that the company would make environmental sustainability a core goal of its investment decisions.
We believe a portfolio that focuses on sustainability and climate change will be a portfolio that outperforms. So the main component of the letter is saying this is going to be a great investment over the next 10 years.
Then Microsoft announced a plan to go carbon negative by 2050, and CEO Satya Nadella explained to our Jim Cramer why that was an easy decision.
I think what happens is if you're creating a lot of profit and creating more problems for planet or people, I think it'll catch up with you. It's our shareholders. I am always saying our shareholders are the ones who are giving us permission to be able to think about whether it is the affordable housing or whether it's the carbon. It's our shareholders who care as much about this as anyone else.
And Airbnb announcing today that it will consider all stakeholders when it comes to corporate governance, not just investors. And employee bonuses will be related to guest safety. For more, let's bring in Anand Giridharadas, Time Editor-at-Large and author of Winners Takes All, the elite charade of changing the world. Anand, thanks for joining us. Good to see you.
Thank you. I'm reminded last time I was here, I was walking with that book, and my arm was covering the subtitle. So a lot of the traders just saw Winners Take All. And I got such positive looks while I walked in. Then they heard the segment on CNBC, and they gave me such contemptuous looks on my way out. So.
Well, I doubt that was completely true, and the good looks remained. But anyway, let's dive into this story. And I've seen some of your tweets earlier in the week. So what was your take when you saw the BlackRock announcement? Let's start with that.
You know, the BlackRock announcement, like a lot of these ESG announcements, some of the others you cited, are the corporate equivalent of New Year's resolutions, right? It is not bad to say that you are not going to eat French fries in the coming year. It's better than maybe not saying that. But to treat that as we all know, to treat that as a guarantee that you're not going to eat French fries is troubling. So BlackRock makes an announcement that it wants to move in this direction. The reality is BlackRock today is one of the largest holders of fossil fuel stocks and has not until now taken the steps to dismantle being that. So it has a New Year's resolution to change that over a period of years, maybe decades. That's fantastic. I also am not going to eat French fries this year, according to me. The problem with these kind of pledges, even if they follow through, which is a really big even if, is that this is a collective action problem, climate. It is the epitome of a collective action problem. Literally every person on the planet will have to live differently, and every government will have to operate differently, and laws will have to be different everywhere if anybody is going to survive this thing. And there is not a single company on earth, including the biggest asset manager in the world, who can do this alone. And what they're all fundamentally pledging is doing this alone, voluntarily, on a private basis, and often suggesting that we not do this through collective action, through government, through law and policy.
Larry Fink, in his interview on CNBC earlier this week, talked about getting incredibly emotional as he wrote this shareholder letter that announced this decision. What do you make of his personal motivations, therefore, for making such a big announcement, making it in such a powerful and emotional way, if they haven't gone far enough in terms of the action yet?
You know, I think you can have a cynical read on it or a more empathetic one. My guess is both are at play in someone like him. You know, the cynical read is, you know where the conversation is going. We're literally talking about the world not being habitable. You have young people who work for his company who maybe don't want to work there if it's not a company they feel good about. You have all that kind of practical stuff. And a lot of these folks are getting out in front of that. But I don't think it's just that. I think someone like him, my read is, someone like him wants to be on the right side of what may be one of the biggest, the biggest issue of our time, an issue of justice, an issue of survival of the species. And yet, I think there is an unwillingness to brook solutions to this that would be expensive, to think about something like a carbon tax, to think about the kinds of regulations that would meaningfully crimp growth that many of the companies they invest in. And I think what's interesting is I'm curious how you get to go overnight from being one of the leading holder of fossil fuel stocks to a leader of the search for solutions to the problem you are still busily causing. He's not just a guy who now cares about climate change. He is marketing himself as a leader of the solution, but he's still holding that Exxon stock. And you talked about Microsoft, another inspiring announcement. These are all inspiring, like my New Year's resolutions, so inspiring. Microsoft, within the last year, has, along with other big tech companies, has signed up new oil companies, oil sands companies in Canada, elsewhere, to help them extract oil faster and automate the process of oil extraction. This is new business they are selling and signing up now. So what's the sincerity of saying you personally as your company want to become carbon neutral, but in terms of services you're selling to clients, which doesn't really count, right? Because that's not your company, that's helping another company make the world worse, even as you're going to make it better. Airbnb, has this stakeholder thing. Again, voluntary virtue, pledging to have a New Year's resolution. Airbnb, as is well known, fights taxation and local regulation everywhere it goes. Cities come up and say, fine, you want to operate in our city the way anybody does. Here's the local tax on a real estate transaction in our city. Airbnb sweeps in lawsuits constantly around the country. It's been reported on by Wired and others. So the question is, why do we trust pledges of voluntary virtue? And why have we ceased to trust democracy as a way to solve shared problems?
But before we start to distrust them, at least they're doing something. At least they're coming out and making these pledges. Now we can hold them to account. Yeah, I don't think Larry Fink and BlackRock can change everything for the entire planet. We need to work together. Now we've got 3 companies that are coming out front. Why are you so distrustful that they can make a real difference and cause other people to make changes?
Because oligarchy.
Okay.
Because this is not day one of this conversation.
No, of course not.
These folks, this class of people, Larry Fink and his friends, have run America to the increasing detriment of most Americans for 40 years. Climate's an issue slightly towards the end of the 40-year period in the public conversation. But in terms of the lives of working people, in terms of pushing for tax cuts and regulations that benefit private companies at the expense of most people, these folks, we have a track record over 40 years of running America more for money than for Americans. And most Americans get that. Frankly, the fact that most Americans...
I think you can make a clear argument of a little bit of duplicity and Larry Fink argument to be an environmental campaigner while still holding fossil fuel stocks. But to broaden that out and say they're not running America in the right way, I think is a bigger leap. Capitalism has stopped working as well as it did in the past, but I don't think an individual like Larry...
Do you think it's working for most Americans today? The thing you guys cover every day, do you think it's working for most Americans?
Not necessarily, but I think it's a much bigger
leap. Isn't that a huge problem?
But it's a much bigger leap for you then to label Larry Fink as somebody that A, is running America, which he's not, and B, is doing it in an immoral...
He's running America?
You did. You said Larry Fink and his friends.
I'm talking about the managerial super elite class that he represents. He's the world's largest asset manager. I didn't say Larry Fink runs America. I'm aware. I wrote a whole book about a class of people who run America. The reality is the data is very clear. Bloomberg News, not a left-wing rag, says that 500 richest people in the world increased their net worth by 1.2 trillion last year. Net worth increase of 25% over the last year. I guarantee most Americans didn't experience a 25% return on their wealth last year. And so when you say your question is the absolute right question. At least they're doing something. I wrote the whole book to answer the at least they're doing something point. Because on the surface, I get it. This is at least they're doing something. Philanthropy is at least they're doing something. Corporate social responsibility is at least they're doing something. There's all these at least they're doing something activities around. And they seem nice. You agree they're not solving everything, but here's the problem with the at least they're doing something. The at least they're doing something upholds. It justifies. It buys a little bit of public mercy and allows us to keep preserving a system that on the whole is causing much more planetary and human devastation than any of those activities could ever hope to remedy.
Thank you for this discussion. We know we're going to have you back because there's a lot more to talk about, and we have a lot of bigger problems that we need to continue to solve. Thank you so much, Anand, for being here with us. Well, up next, the Forgotten 40. One Wall Street firm is pulling out its 40 best ideas for 2020. We'll highlight the top 3 stocks that are cheap and could outperform the market this year.
Whatever job you're searching for, you can find it on LinkedIn. Banking jobs, building jobs, extra hour in bed jobs, Waterloo jobs, Canary Wharf jobs. New year, new you, new job, jobs. First jobs, flexible jobs, pay off the Christmas debt jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs. Small jobs, big jobs, work from home in your PJs jobs. Or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
This is not a cat. This is not a rocket. And this is not a sale. That's right. At Smarty Mobile, we're not having a sale. While others are slashing prices, we're introducing our best ever new plans. Take our new 30 gig data SIM for just £10 a month. With unlimited calls and texts and no speed restrictions, credit checks or contract tying you down, why shop around? New plans, great value. Now that's Smarty. Grab yours today. Search Smarty Mobile. See smarty.co.uk for terms.
Hello, I'm your captain for today's Virgin Atlantic flight. Please drop everything and pay close attention to the following announcement. The sail is now on. Our crew are ready to take your bags and stresses away. The cocktails are ready to serve, the movies are loaded, and we're all set for takeoff to the Caribbean. So, take your seat in our award-winning economy class. We're ready to go when you are.
The Virgin Atlantic sail. Fly amazing for less. For more details, visit virginatlantic.com.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Down the middle of the 10, got to the 5, tumbles in, touchdown.
TuneIn has your NFL playoffs live all weekend. So when you're running to the store or stuck in traffic, TuneIn has you covered.
Puts his head down, crashes and spins and dives. Touchdown!
Search NFL and get prepared for the action.
Touchdown!
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Welcome back. Every year, the Boya Value Group puts out a list of the Forgotten 40, which includes 40 stocks that the firm believes will outperform the major indices in the year ahead. Some of the standouts on this year's list, Discovery, the Madison Square Garden Company, and Hanesbrands. Joining us now to explain why is Jonathan Boyar, president of Boyar's Intrinsic Value Research. Good to see you, Jonathan. Thanks so much for joining us.
Thanks for having me.
Let's kick off with Discovery. Talk us through why that's such a standout name for you.
Well, it's clearly in an out-of-favor industry. They're able to produce content significantly cheaper than all the other companies out there. They have billions of subscribers worldwide. They're able to amortize that cost over all those subscribers. In addition, John Malone just purchased $75 million worth of shares personally. The last time he did that, the shares were $18. Now it's a $30 stock. He's usually a pretty good forward indicator.
We talk so much about the streaming wars, and this is certainly not necessarily a streaming-first company here. Do you think there's any possibility that they could be acquired by one of these bigger names? Is there value there?
Absolutely. I think they're definitely an acquisition candidate, especially if shares continue to languish. There's lots of media companies and technology companies that would definitely would love to take a run with them.
It's going to hit Madison Square Garden. This has been a spin-off. It's been kind of a serial spin-off story. Also pretty popular in people who play those types of things, but there's still room left there. I mean, what's the hidden value?
The hidden value is, one, it's a $305 stock roughly. We think it's worth close to $400. I mean, you're at peak pessimism in terms of the Knicks couldn't get any worse. The Rangers are doing fine, but the asset values are there. Currently, right now, you're buying the Knicks and the Rangers at $305 a share and getting Madison Square Garden, the air rights above it, the entertainment business, and Radio City Music Hall for free, plus the LA Forum. So it's significantly undervalued.
And Hanesbrand is one of the next ones we picked out. Talk us through that call.
Hanesbrands is, certainly has had its troubles over the last couple of years. That has to do with, the closings of a lot of different Macy's, JCPenney's, et cetera. But they have terrific brands. And it's not just Hanes, it's Champion. Champion is growing tremendously each year. That's a company that could potentially spin out Champion. That would certainly help the stock as well. And they've also done a great job of deleveraging.
Champion has sort of seen this rise because of this 90s nostalgia and people be getting really excited again about that name. I just wonder if that fades out after some time because it's sort of riding this trend wave. But by and large, it seems that Hanesbrands got sold off a lot during all of the tariff fear, even though it didn't have as high of exposure as some others, but it just kind of got washed out with everybody else.
It got totally washed out. I mean, this was a $30 stock not too long ago. It's now 14 and change. We think it's worth $27. This is another stock that we think, if it continues to languish, private equity could take a run at it, or a strategic acquirer could come in.
One of the names I noticed was also on your list following yesterday's Peacock announcement is CNBC's parent company, Comcast. Talk us through.
Well, Comcast is unbelievably cheap. If you look at Comcast as opposed to Charter over the last couple of years, Comcast has been a significant underperformer. Peacock, it seems like they're doing all the right things. They have great content that they're finally going to be able to monetize. They're growing broadband subscribers each and every year. It seems like they're in the right direction.
Jonathan, thank you for being here with us. Run us through some of those names: Discovery, Madison Square Garden, Hanesbrands, Comcast. I know you've got a number of others. Thank you.
Thanks for having me.
Well, coming up, we'll come back to that Best Buy story that just broke this hour with the CEO accused of having an inappropriate relationship with a fellow employee. Stick with the closing bell. We'll be back in just a moment.
Fly with Cathay Pacific and arrive ready to make the most of the bustling markets of Hanoi. Book now at cathaypacific.com. Cathay Pacific. Move beyond.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. LeBron James, Anthony Davis, and the Lakers are in Houston to take on James Harden, Russell Westbrook, and the Rockets.
LeBron turned the corner! Slam dunk LeBron!
Harden steps left. He shoots for three, and that goes in.
This Saturday, the Los Angeles Lakers are at the Houston Rockets. Tip-off is at 8:30 p.m. Eastern. Search NBA to follow your favorite NBA team today.
On the goal line, scores! He takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes it over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Welcome back. Best Buy shares under pressure after news broke that the company is opening a probe into CEO Corey Barry's personal conduct after an anonymous letter to the board accused her of having a romantic relationship with a former senior vice president. It's not the first time Best Buy has dealt with this kind of issue. Former CEO Brian Dunn resigned in 2012 after an internal investigation determined he had an inappropriate relationship with a former co-worker. Best Buy shares slipped up to about a 2% initially, but recovered. They're now basically flat in after-hours trade.
Let's send it over to Mike Santoli for his final dashboard of the day and the week. Hi, Mike.
Yeah, that's right, Corey. Yeah, we're going to ask now if there's a gradual descent underway in the surplus of available jobs. This morning we got the so-called JOLTS data. That's job openings, labor turnover report from the Bureau of Labor Statistics. And it did curl lower. It was lower than expected. And this is a longer-term look at the history of this data series. And obviously you see that, folding into a recessionary period like we saw here, you did see that crest. Now, obviously, this is still a very high number. It's a 6.8 million open jobs right now. It's more than the number of people who say they're unemployed and looking for a job. So clearly, there's still a lot of supply-demand imbalance out there, but it does suggest that employers are getting a little bit less aggressive. We've also seen a curling higher in continuing jobless claims, not so much weekly new unemployment claims, but continuing claims. These are kind of straws in the wind for the labor market to suggest at least it's going to probably decelerate from the recent very good readings we've had, guys.
And in general, the jobs data obviously supports the Fed's position that they're in at the moment.
It does. I mean, essentially, they've been happy to see the jobs market do well because even the wage gains we've seen have not been filtering through to broader inflation, which the Fed is happy to allow that dynamic to play out.
Okay, Mike, thanks so much. Up next, we will have a preview of the World Economic Forum, which kicks off next week in Davos, Switzerland.
Keys. Check. Phone. Check. 70s playlist downloaded? Check. Nice. There's one more thing you should check before you leave. Your travel. There's a new cycleway under construction between Kensington Olympia and Brentford Town Centre, so expect delays due to lane closures at the junction of Kew Bridge Road and Chiswick High Road. Plan ahead at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
NFL Conference Championship Weekend is live on TuneIn, starting Sunday at 3:05 p.m. Eastern. Don't miss the Tennessee Titans and the Kansas City Chiefs in the AFC Championship.
Gets to the goal line, in for the touchdown!
Then, starting at 6:40 p.m. Eastern, hear the Green Bay Packers and San Francisco 49ers clash for the NFC crown.
Shotgun snap, hand off to Jones, knifes in over the left guard, touchdown!
At home or on the go, don't miss a second of playoff action with TuneIn Premium. Search Premium to upgrade.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back. The 2020 Davos World Economic Forum kicking off next week. Coverage will begin on Tuesday, but much more importantly than Davos itself, it also marks the return of Sarah Eisen. Sarah, my main takeaway of this is that on your first day back at work, you've decided to be as far away from us as possible. What's that about?
Not on purpose, Wilfred. You know I could not miss a Davos, and I was so excited to join you again that I called you on Friday evening to get you excited about next week.
And,
we've got a fantastic lineup of guests.
I was going to say, we're very excited. Talk us through some of the top guests.
Well, you know, at Davos, at the World Economic Forum, it's a good mix of prime ministers and presidents and CEOs and random celebrities that are there. And they're all talking about this topic that you guys have been talking about all hour, ESG, and how that has really been a paradigm shift in terms of investment. So we're going to talk to CEOs for Closing Bell on Tuesday, including the CEO of Nestle, the world's biggest food company. We're going to talk to Priyanka Chopra Jonas about what she's doing there and why she's mingling with the billionaires up in Davos. And we're going to just continue this conversation about how to tie these important initiatives on the environment, in particular, climate change, the number one risk, according to the World Economic Forum's latest survey, to profitability and to continued economic growth. And Wilfred, I know you're going to be super jealous. I'm moderating a panel on Brexit and what it means for European growth. The CEO of Deutsche Bank is going to be there, so I might call you ahead of time to help prep me.
Well, please do, although I'm, as you said, a little bit jealous, so I may or may not offer a couple of questions up. But what can we expect some of the other themes of the entire gathering, the entire week to be? I mean, clearly on one level, we've got much improved global trade relations with USMCA and Phase 1 passing and moving towards completion. But on the other side, the sort of US versus Europe tensions are escalating again a bit.
Absolutely. And President Trump will be setting the tone. He's actually attending the World Economic Forum this year. Remember, last year, he wasn't there. So he's speaking on Tuesday morning. So I think that'll help set the tone. German Chancellor Angela Merkel is there as well, along with a number of other world leaders. Actually, Zelensky of Ukraine will be there, so it'll make for some interesting encounters on the sidelines. But as far as other themes, I think it's inclusive growth. I think it's tackling, as I mentioned, climate change and equality. Those are sort of the big picture topics. But there's also a question of what happens in the next downturn. And I think that continues to be out there as we enter another year of solid economic growth. Do central bankers have bullets? Do fiscal policymakers have bullets? That continues to be a pretty live and active discussion because at some point it's going to happen, right? And a lot of those policymakers are there, and a lot of the policy coordination and ideas, and they're going to have to start getting creative, come from places like this.
Well, Sarah, have a safe trip and have a great trip.
Thank
and we look forward to all of the coverage and hurry on back and look forward even more to a week on Monday when you're back here in person.
I miss you guys. Yeah, and you're not going to get away with anything. And I'm sure the ladies have continued to tease you, Wilfred, but expect a lot of that when I come back.
Oh, I will, but I've got 4 months of saved up comebacks as well. So there we go. I look forward to it immensely. Sarah, we'll see you in person in just over a week and on camera next week in Davos. Safe travels. We've got time just about to hit the buzz on Wall Street. Amazon CEO Jeff Bezos appearing at a red carpet event in India with girlfriend and former TV anchor Lauren Sanchez. The executive, who was coined a style icon by the New York Times in 2018, was sporting an eye-catching black and white tuxedo jackets. Check it out.
Yeah, really living up to that style icon title. Look at this that is quite a... Could you pull up that jacket?
No.